Mad Money Lightning Round is brought to you by TD Ameritrade, where smart investors get smarter.
And then the lightning round is over. Are you ready, Steve? Time for the lightning round. Credit starts with Lisa in Missouri. Lisa!
Kramer,
Lisa.
thank you for picking up. I really would like to know what you think about Martin Marietta.
Well-run company, doesn't need the stimulus, doesn't need the infrastructure package, just needs for this country to stay on course. It might be a little rocky here, but I like it. Let's go to Walter, North Carolina. Walter.
Jim from Boulder in North Carolina.
Okay, what's up?
For taking my call.
Sure.
What's your show every night and have for many years?
Thank you very much.
Need your expert advice.
Sure.
Many analysts say Bank of America is the best financial stock to own. Their stock performance in the past 5 days cannot confirm their optimism. It is down $1.06 or 2.5%. Today their stock closed at $41.62, up 30 cents. My question, should I buy at this low price?
Well, Walter, we're saying that over the next 4 or 5 days, there's going to be some weakness in the market, but I agree that Bank of America is an excellent institution. And if you think rates ultimately will have to go up, which the Fed certainly said, Bank of America is going to go higher. So I am in favor of holding and then buying a couple days from now. Now we're going to go to Daniel. And thank you for the nice comments. Daniel in New York. Daniel.
Hey, Jimmy, how you doing?
All right, my brother. What's shaking with you?
I'm doing great. Now my question is regarding CRISPR Therapeutics, ticker CRSP.
Here's the problem with CRISPR. If they called it anything else other than CRISPR, people wouldn't be drawn to it. But people are so into CRISPR stuff, they're like, oh, let me buy this one. I got to tell you, I honestly would prefer to see you in Vertex, which has just got hammered, or Regeneron, where the news is very good. Can I go to Quentin in Georgia? Quentin.
Jim, thank you so much for taking my call.
Oh, my pleasure, Quentin. What's going on?
Jim, so 3 years ago, you hit a grand slam with your recommendation of AMD.
Thank you.
The stock is about 20% off its highs, and it's been consolidating for about a year. We've also seen a record increase in shares short to about 85 million for the past 3 months. I understand the merger arbitrage. But AMD announced a $4 billion stock buyback plan in the UK. It says that they're going to finish their approval process with Xilinx July 5th.
Right. Well, look, let's look at it like this. I mean, first it was in May. Let's look. May of last year, it was at 52. Now it's 80. Lisa Su is doing an amazing job. Here's what I think happens ultimately. Okay. I think when that Xilinx deal closes, that stock just soars. I'm urging you to buy it right here, right now. Can I go to Zach in Texas? Zach.
Jimmy, a big booyah. What's up, Jimmy?
Booyah, booyah. A lot of things are up, looking good. That Centene was good today. What's going on? How's the stock?
Hey, man, life is good, money is good. At the end of the day, it's all about the money. Jimmy, I got 140 shares on AT&T.
And that, ladies and gentlemen, is the conclusion of the Lightning Round.
The Lightning Round is sponsored by TD Ameritrade.
Lightning Round, Lightning Round. Hey, it's Dayo.
Raise interest on excess reserves and the reverse rate.
Oh,
People are going to panic if they see that the Fed's raising rates on anything. Explain the significance of that if they do go forward with it.
Hey, it's Dayo.
I want you to be frank, and really the reason the Fed might do this, and we think it will.
What's up? What's up? What's up, everyone? What's going on?
Treasury bill market, and in particular, money market funds. So to keep things relatively brief, yields have been negative.
What's going on, guys?
Levels for a while. This is a bad situation. It could probably get worse if the Fed doesn't act. So it's a pretty cheap insurance policy. We think the Fed will go ahead with this.
And Michael, can you sort of tell people whether all of this liquidity that's pushing those really short-term rates negative, what is that a sign of? A lot of people say it's a sign that there's too much liquidity in the system and that the Fed is going, way too hard in terms of its liquidity injections. Is that true, or are people Do you think they might raise interest on excess reserves and the reverse repo rate? While it sounds wonky, people are going to panic if they see that the Fed's raising rates on anything. Explain the significance of that if they do go forward with it.
Yeah, Kelly, it is a bit wonky, to be frank.
What's up, Edie? What's up, Kevin? Anthony, what's up? Good morning, guys. What stock split are you talking about, Edie? What stock split? I didn't get any email from eToro. No email from eToro regarding any stock split.
Or money market funds. So to keep things relatively brief, yields have been negative or very close to negative levels for a while. This is a bad situation. It could probably get worse if the Fed doesn't act. So it's a pretty cheap insurance policy. We think the Fed will go ahead with this.
And Michael, can you sort of tell people whether all of this liquidity that's pushing those really short-term rates negative, what is that a sign of? A lot of people say it's a sign that there's too much liquidity in the system and that the Fed is going, way too hard in terms of its liquidity injections. Is that true, or are people drawing the wrong conclusions?
We think that's part of it. But the other thing, Kelly, is remember that awful thing, the U.S. debt ceiling? That comes back into play on August 1st. And that means Treasury's got to take its cash balance down dramatically. So the big takeaway is there'll be fewer Treasury bills in the market for the next month and a half. And that puts more downward pressure on yields. So it's a combination of lots of
stock split.
Supply of Treasury bills.
Wait a minute. I need to check that out, guys. I mean, this is the first time I'm hearing anything stock split about eToro. Let me quickly check it out, guys. Let me check it out. Stock split. Stock split? I need to check that out. Stock split. I mean, this is the first time I'm hearing this, guys. I got an email alert from BNGO. They are talking stock. Is it possible for you to share that email with me? Is there a possibility for you to share it? I mean, did you... Stock split, BNGO. I mean, there is nothing on BNGO wall regarding any stock split, guys. I can't find anything BNGO stock split. I'll keep digging. Stock split. Just send it to, or just send, right, Edie, send me a message on Twitter, Edie. Send me a message on Twitter. I'm going to give you my email. Then you can forward it to me, please. Write me on Twitter at bonus level. Write me on Twitter. Then I will give you my email. Then you can send it to me. I'm in Germany, Edie. I am in Germany. Stock split. Please send that. Write me on Twitter, please. Send me a message on Twitter. Let me check it out. Stock split eToro. I can't find anything on eToro's wall regarding Bionano Genomics stock split, guys. Invest in There is nothing on eToro regarding anything like stock split. Please send me a message on Twitter. Let me check it out. Write me on Twitter so I can give you my email, my personal email. Then you can send it to me. I mean, there is nothing about, I hope nobody's messing with you, Edie. Maybe it's a fake message from some kind of fake eToro account or something. But, I don't, there's no email from, I haven't received any mail from eToro regarding BNGO stock split. And I think if BNGO is going to make a stock split, we would have at least received, we would have seen a tweet from eToro or some kind of press release from BNGO, Bionano Genomics. But there is nothing from Bionano Genomics regarding stock split, guys. I mean, What are you talking about?
Things you might hear today. This is not just, you think they might raise interest on excess reserves and the reverse repo rate. While it sounds wonky, people are going to panic if they see that the Fed's raising rates on anything. Explain the significance of that if they do go forward with it.
Yeah, Kelly, it is a bit wonky, to be frank. And really the reason the Fed might do this, and we think it will, is to take some pressure away from the Treasury bill market and in particular money market funds. So to keep things relatively brief, yields have been negative or very close to negative levels for a while. This is a bad situation. It could probably get worse if the Fed doesn't act. So it's a pretty cheap insurance policy. We think the Fed will go ahead with this.
Michael, can you sort of tell people whether all of this liquidity that's pushing those really short-term rates negative, what is that a sign of? A lot of people say it's a sign that there's too much liquidity in the system and that the Fed is going, way too hard in terms of its liquidity injections. Is that true, or are people drawing the wrong conclusions?
We think that's part of it. But the other thing, Kelly, is remember that awful thing, the U.S. debt ceiling? That comes back into play on August 1st. And that means Treasury's got to take its cash balance down dramatically. So the big takeaway is there'll be fewer Treasury bills in the market for the next month and a half. And that puts more downward pressure on yields. So it's a combination of lots of liquidity and diminished supply of Treasury bills. Those two things coming together put the Fed in a tough spot.
Wow, that's interesting that it could get even worse, Steve Whiting, before it gets better. So, that's one aspect that there's a lot of different things you might hear today. This is not just, hey, the Fed left rates unchanged, which it's most likely to do. It's, okay, it might raise rates in sort of the sphere that Michael Schumacher is talking about. They have the rate decision itself to decide upon. They have the forward projections, the dots, as we'll call them over the next couple of hours here. And those projections are seen as a sign of what they really expect to be doing with monetary policy. And the rate hikes themselves, no one's really expecting till about 2023, but they might kind of pull those forward implicitly. So what do you think markets are positioned for?
Well, look, I think markets should, and clearly already have been anticipating that the Federal Reserve, if it wants an early warning, right, about just tapering, just slowing the pace of easing, and these technical issues that Michael just mentioned, for example, are not going to determine policy, that it's time to start acknowledging, that a period of time is needed here for us to just cool the pace of easing. That at this pace, if we were to keep adding jobs at this pace, for example, we'd have the unemployment rate back down to the 3.5 level.
Wow.
In about 16 months. And that's if we get the 3.5 million people who have left the labor force back at the same time at this pace. So, we clearly have seen distortion.
Hey, Hidi, I just wrote you on Twitter. Please check your inbox on Twitter. I just sent you my email address, so please forward it to me. I want to see it. I want to see it. Stock split, BNGO stock split. That is something scary. Why would BNGO want to split their stock at what is it even? What was it yesterday? $7.78 US. We will see.
Abortions, these are real issues. We've had demand move rapidly from one big part of the economy to another. No supplier could possibly anticipate that. That can generate inflation spikes. This is not really what this is about. It's that going forward, we can't keep crisis level easing going on in a fully recovered economy.
That makes sense, Steve, to everybody. And I think you're a little bit, I read through your notes, you're a little bit in the Paul Tudor Jones camp, which is if the Fed doesn't acknowledge the inflation pressures that are here and that might be coming, put those trades on its lunacy and so forth. Here's the thing, though, that everybody's sitting here wondering, what is going on with the 10-year yield, right? If we were all really concerned that the Fed were behind the curve, the 10-year...
Okay, so this is strange. This is strange. Is this everything you received? Edie, could you just forward it to my email so that I can at least, so that I can take a good look at it? Could you forward it to my email instead of the screenshot? I want to take a look at it. This looks strange to me. This looks somehow strange to me. File. Bionano Genomics stock split, guys. I mean, this is something scary. PG. Let's see. So so ED, you just received this. I mean, this is scary, okay? Is this from eToro or from Bionano Genomics, directly from Bionano Genomics? Okay, I can't see where the email, the email address of the sender. So please send it, just forward it to my email and I can take a good look at it. So Bionano Genomics investor relations alert, corporate event alert for Bionano Genomics stock split of ratio declared X date. That is something crazy. That is crazy, guys. Direct from Bionano. From Bionano. I didn't receive any email from Bionano Genomics. Please forward it to my email, ED. Please forward it to my email. Let me check it out. Please forward it to my email. This is strange. Absolutely strange.
Here would already be spiking. I mean, there were, unless they thought, okay, well, they're going to be so far behind, they have to catch up quickly, and that's going to hurt the economy, and that's going to bring down the level of the 10-year. Other speculations as to why it's so low say, same thing we're seeing in all the meme stocks, all this short, these short squeezes, that's happening over in the Treasury market. And this is just a short. So how, given everything that you're describing, for all the people who agree with you, why is the 10-year bond yield where it is?
Let's just keep in mind that global yields are about a full percentage point lower than in the United States, that the Federal Reserve is providing and buying about the equivalent of the entire need for the whole corporate sector in the bond market, that this is a reasonable distortion. But I do think that the Federal Reserve...
Edie, I already sent you my email on Twitter. I sent you my email as message. Check your inbox. I sent it to you direct message, DM.
Thanks for watching CNBC.
I want to listen to this once again. This guy was talking about the financial economist, about the inflation.
Raise interest on excess reserves and the reverse repo rate. While it sounds wonky, people are going to panic if they see that the Fed's raising rates on anything. Explain the significance of that if they do go forward with it.
Yeah, Kelly, it is a bit wonky, to be frank. And really the reason the Fed might do this, and we think it will, is to take some pressure away from the Treasury bill market and in particular money market funds. So to keep things relatively brief, yields have been negative or very close to negative levels for a while. This is a bad situation. It could probably get worse if the Fed doesn't act. So it's a pretty cheap insurance policy. We think the Fed will go ahead with this.
Michael, can you sort of tell people whether all of this liquidity that's pushing those really short-term rates negative, what is that a sign of? A lot of people say it's a sign that there's too much liquidity in the system and that the Fed is going, way too hard in terms of its liquidity injections. Is that true, or are people drawing the wrong conclusions?
We think that's part of it. But the other thing, Kelly, is remember that awful thing, the U.S. debt ceiling? That comes back into play on August 1st. And that means Treasury's got to take its cash balance down dramatically. So the big takeaway is there'll be fewer Treasury bills in the market for the next month and a half. And that puts more downward pressure on yields. So it's a combination of lots of liquidity and diminished supply of Treasury bills. Those two things coming together put the Fed in a tough spot.
Wow, that's interesting that it could get even worse, Steve Whiting, before it gets better. So, that's one aspect. There's a lot of different things we might hear today. This is not just, hey, the Fed left rates unchanged, which it's most likely to do. It's, okay, it might raise rates in sort of the sphere that Michael Schumacher is talking about. They have the rate decision itself to decide upon. They have the forward projections, the dots, as we'll call them, over the next couple of hours here. And those projections are seen as a sign of what they really expect to be doing with monetary policy. And the rate hikes themselves, no one's really expecting until about 2023, but they might kind of pull those forward implicitly. So what do you think markets are positioned for?
Well, look, I think markets should and clearly already have been anticipating that the Federal Reserve, if it wants an early warning, right, about just tapering, just slowing the pace of easing, and these technical issues that Michael just mentioned, for example, are not going to determine policy, that it's time to start acknowledging, that a period of time is needed here for us to just hold the pace of easing. That at this pace, if we were to keep adding jobs at this pace, for example, we'd have the unemployment rate back down to the 3.5 level.
Wow.
In about 16 months. And that's if we get the 3.5 million people who have left the labor force back at the same time at this pace. So, we clearly have seen distortions. These are real issues. We've had demand move rapidly from one big part of the economy to another. No supplier could possibly anticipate that. That can generate inflation spikes. This is not really what this is about. It's that going forward, we can't keep crisis level easing going on in a fully recovered economy.
That makes sense, Steve, to everybody. And I think you're a little bit, I read through your notes, a little bit in the Paul Tudor Jones camp, which is if the Fed doesn't acknowledge the inflation pressures that are here and that might be coming, put those trades on its lunacy and so forth. Here's the thing, though, that everybody's sitting here wondering, what is going on with the 10-year yield, right? If we were all really concerned that the Fed were behind the curve, the 10-year would already be spiking. I mean, there were, unless they thought, okay, well, they're going to be so far behind, they have to catch up quickly, and that's going to hurt the economy, and that's going to bring down the level of the 10-year. Other speculations as to why it's so low say, same thing we're seeing in all the meme stocks, all this short, these short squeezes, that's happening over in the Treasury market. And this is just a short. So how, given everything that you're describing, for all the people who agree with you, why is the 10-year bond yield where it is?
Let's just keep in mind that global yields are about a full percentage point lower than in the United States, that the Federal Reserve is providing and buying about the equivalent of...
Hello, Sharon. What's going on, sister? What's up?
This is a reasonable distortion, but I do think that the Federal Reserve has some...
How are you?
Just in the past month, long-term inflation expectations have dropped 20 basis points because I think markets are more prepared to understand the distortions of the economy that we've just seen.
Shepard Smith here. Thanks for watching CNBC
on YouTube.
Good afternoon. At the Federal Reserve, we're...
Meanwhile, I also want you to consider real-time things that are happening like commodity prices. They're coming down pretty quick. Lumber's coming down fast, copper's coming down fast. And does anybody want to tell the bond market that there's runaway inflation? Because take a look at the 10-year yield. Doesn't seem to know or mind. So with that in question, we brought in two of the best. Quill Intelligence, Danielle DiMartino Booth is with us. And Danielle, let me just start with you. Listen, I'm not sure where you are with respect to the transitory camp or not. Tell us, do you think inflation is transitory, i.e. short term, and the Fed should stay the course, or are they making a big mistake?
Well, I think the Fed right now is grappling with a lot of cross currents, Charles. I don't know that there's an exact right answer to your question. You just alluded to commodities. The CRB index is actually down on the week as of today. So that aspect is indeed looking like it's going to be transitory. On the other hand, Charles, rental inflation looks to be picking up steam. This does not fall into your flexible bucket in any way. This is the worst type of inflation. It's the largest line item for any U.S. household's budget. And it looks as if fresh data out of Zillow suggests that we're going to see...
Edie, I just received your email, and this is strange. This is strange. Bionano Genomics investor relations alert. Guys, I think something is going on, okay? I still have to, I need to take my time and dig deep into this. I just got this from Edie. And this is from Bionano Genomics, it seems. Bionano Genomics investor alert, and they are talking about, this is about corporate event alert for Bionano Genomics stock split of ratio declared, X date. It's really not, there is, I would expect more details, but there seems to be, not enough information to decide if, to figure out if this is a stock split or, why would Bionano Genomics make a stock split? That is something I don't understand. This is shocking, okay? This is shocking. I still need to dig deeper.
At the last meeting, what changed since the last meeting? We got two disappointing payroll reports and we got two monster inflation reports. So it seems like that the Fed is getting a little weak-kneed on the transitory idea about inflation, because they're not moving because the employment situation got better. It didn't since the last meeting, but the inflation situation got worse.
Well, to your point, they're looking at 2021 PCE inflation, 3.4% from 2.4%. I guess maybe then, Jim, we're learning because they've never been specific about how much further above the 2% target they're willing to allow inflation to linger. I guess the answer is certainly not 3.4%.
Yeah, we don't know how much they're willing to go above their target, and we don't know what the word transitory means. I've joked that the word transitory means as long as the bond market is not bothered by it, but when the bond market is, then it's not transitory anymore. And so there does seem to be a little bit of an internal pushback at the Fed about this whole transitory idea, and I think it's starting to show up in the data. Hopefully the Q&A will kind of flesh this out. Are you guys really thinking that employment's going to boom and that's why you're going to raise rates? Or are you getting a little bit worried about the transitory nature of inflation? I think it's more about the transitory nature of inflation.
You know, we just had Larry Kudlow who talked about the independence of the Fed, at least when it comes to green energy. For now, we'll see. But Janet Yellen made comments earlier today about inflation expectations, saying she said they were transitory and that they, for the most part, they're measured. And I bring that up, Danielle, because it feels like this Fed and this Treasury Secretary and this administration are working hand in hand at changing things, being focused on societal things that we've never really seen them try before. So I keep feeling that Jay Powell is going to find any excuse possible, no matter what, to stay the course to see if his grand experiment works. I don't know if he should be doing it or not, but this is my opinion on that. Would there be enough pushback to make him change his mind?
Well, Charles, we'll have to see. But the fact of the matter is,
I think Bionano Genomics is going to get to, there is a very good chance we are going to see $8 today, $8 guys. So watch out. I think BNGO is going to $8, $8.11 to be precise. Once we break out of this channel, once we, manage to break out of this channel, guys, I think we are mooning. This is a channel right here. We need to get out of this channel. I believe the only reason why we came down, yesterday, 2 days ago, since Monday, is because of the Fed interest rate decision, which happened yesterday. So that is over. So as you guys can see, NASDAQ is going higher at the moment. NASDAQ, I'm also tracking some other stocks. So let's see where BNGO is going.
It's too early to consider that maybe this reopening boom, the roaring 20s, maybe it's already fading.
No, it's not too early to consider it. It might be fading. If you look at the University of Michigan Consumer Confidence Report, when they asked if it's a good time to buy a house, it was an all-time low. When they asked why, they said soaring.
Oh.
My mission is simple: to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, he's Kramer. Hey, I'm Kramer. Welcome to Mad Money. Welcome to Kramer. Other people want to make friends, just trying to make you some money. My job is not just to entertain, but to educate, teach, put it all in context. So call me at 1-800-743-CNBC or tweet me at Jim Kramer. The market rolled over after today's Fed meeting. Dow slipping 266 points, S&P losing 0.54%, NASDAQ declining only 0.24%. What did you expect? I'm not surprised by what happened today. I'm surprised that other people are surprised. And that's my take on what the Federal Reserve did today. Jay Powell didn't lower the boom on the stock market. He simply acknowledged what you and I know already. This is really good, getting better. A lot of stimulus around, but it's still not good enough because too many people are being left behind, especially African Americans and Hispanics. So as the chairman said, interest rates need to stay low, but not so low that a little inflation is a good deal if it means we can get a lot more people hired. Well, we've got some shortages right now for certain. You're going to hear about that later tonight. Powell knows he can't stop those shortages without throwing millions of people out of work, which is a pretty severe solution for a problem that will ultimately solve itself. Emphasis on ultimately, but sometimes common sense shocks people. What? Is the Fed chairman supposed to be oblivious to the state of the economy? Well, that would make him a fool. Jay Powell's no fool. The jackals want to trip him up, but he refuses to give them what they want. The idea that Powell needs to figure out the game plan for the next 2 or 3 years right at this very moment is also absurd. When the Fed pencils in those 2 potential rate hikes in the second half of 2023, they're basically saying, hey, we got a real good economy. And if it stays this way, good. Well, if it stays this way, yeah, maybe we have to tighten in a couple of years. All right, we'll do it. Here's the irony. If Powell had said, and I quote, we don't see strength, we're worried about unemployment, and there are no shortages, end quote, people would be freaking out right now because it would look like the Fed chief had lost his mind. On the other hand, if he'd said, oh, okay, the economy's overheating, it's time to taper bond purchases and raise interest rates, end quote, well, that would have made him look equally foolhardy and oblivious. An oblivious Fed ultimately leads to lower stock prices. Fortunately, unlike his critics, Powell knows what he's doing. The meeting in that sense is a watershed. Powell's left himself a lot of flexibility. He said, I quote, we are a ways away, end quote, from taking action, quote, but we're making progress, end quote. I don't know why that surprised people. If you thought we weren't making progress toward full employment, I have only one question. What are you smoking? Maybe you should give the guys at MindMed a call because you're hitting the psychedelics a little too hard. And if you thought we were making too much progress, well, then you know what? You really are living in a hawkish fantasy land. So what does this mean for the market? How do you adjust your portfolio? First, arguably, you don't need to do a thing. Earlier this week, I highlighted some work from Larry Williams, the technician I swear by. He warned us of the late June swoon. Well, guess what? Like I said on Monday, if you're nimble and you like to trade, you can take something off the table as long as you're ready to buy it back before the end of next week. The charts say don't buy, don't buy. And I give them more weight than the spots and dots that everyone's obsessing from the Fed. I took that course, by the way, I aced it. Now, second, the Fed basically did nothing today except take itself out of the equation for the next 6 months. That was it. That means you should buy stocks that can deliver better than expected earnings in a low rate environment. The reporters are all trying to get Powell to commit to some silly timeline, some timetable that would wreck the economy and probably not stop inflation. He's not playing that game, though. He wants people to make a little more money. Who said wage inflation is a bad thing? Most people, except CEOs in this country, are underpaid. He knows there are imbalances in the economy, shortages, because business didn't realize we beat the pandemic this quickly, and there's been a huge amount of stimulus. But as Powell said, and I quote, there's a big group of unemployed people, end quote, and he doesn't want to leave them behind just to please billionaires, oligarchs, kleptomaniacs, and useful idiots in the media who want higher rates. These inflation hawks are like the boy who cried wolf. They've spent decades warning that hyperinflation is always right around the corner. They've been wrong every time. When Powell mistakenly listened to them in 2018, he nearly wrecked the economy before he changed course. Now we actually do have some inflation, but the hawks no longer have any credibility in my eyes. Now I know some reporters will look at today's negative action and jump to the conclusion that the Fed's getting ready to take away the punch bowl. Couldn't be more wrong. Powell knows that demand for goods is very high. He knows that people are spending without taking down a lot of debt. Those are both good. Most importantly, he thinks the sources of inflation could abate on their own. Shortages ending, stimulus running out, rent abatements winding down, COVID going away. So he'd rather wait and see that than start tightening. You know what it's called, what he's doing? There's a word for it. It's called prudence. I like prudence, especially when it comes to your money. I think there are a lot of grizzled financial veterans who can't believe their eyes right now because they're so used to the Fed operating in a completely different way. Powell doesn't want to operate that way anymore. He thinks we can have strong job growth and strong spending without causing too much inflation, something, by the way, we didn't see in 2019. In other words, Powell believes we can have some key lime pie and have a decent size, but not too big piece, smaller piece. If that's the case, then I think you should simply stay the course, maybe using this decline to buy some high-quality stocks, especially industrials, right into the teeth of a downturn we have anticipated here with the help of Larry Williams. With the Fed taking itself out of the equation for at least 6 months, maybe longer, the industrials have a lot more room to run. The problem, by the way, I include the technology stocks with the industrials. The problem right now is that the experts, from the economists to the reporters who follow the Fed, to the hedge fund managers who trade off the Fed's moves, see, they just can't seem to grasp that Jay Powell just isn't one of them. Never mind that he was a private equity guy. He's like no other Fed chief I can recall. Powell actually learns from his mistakes. In 2018, he listened to the inflation hawks and spoke glibly about the need for 3 rate hikes. That blew up in his face. He quickly had to change course. Since then, he's approached his job with a sense of humility. He reiterated that today. He knows that it's hard to predict what the economy will do. So he wants to err on the side of a strong labor market, even if it means we have a little more inflation. Yet, Powell's different. He isn't the Tin Man Fed chief like his predecessors. He has a heart that's very hard for money managers to get because it's unprecedented. They're used to Fed chiefs who say, the economy's getting real good. Let's make it really bad. Let's hurt the working man. Powell just won't do that. For my whole adult life, the Fed had a zero tolerance policy toward inflation. But if viewed elevated unemployment as a necessary evil, Powell has flipped that around. He has a zero tolerance policy toward high unemployment, and he views inflation as a necessary evil. He's a central banker who actually cares about human beings. Of course, lots of very rich people don't like that Powell has a heart. They hate inflation, especially wage inflation. So they want to rip his heart out, like the great scene in Indiana Jones and the Temple of Doom. Bottom line, sorry, Powell's heart successors. He has a heart that's very hard for money managers to get because it's unprecedented. They're used to Fed chiefs who say, the economy's getting real good. Let's make it really bad. Let's hurt the working man. Powell just won't do that. For my whole adult life, the Fed had a zero tolerance policy toward inflation. But if viewed elevated unemployment as a necessary evil, Powell has flipped that around. He has a zero tolerance policy toward high unemployment, and he views inflation as a necessary evil. He's a central banker who actually cares about human beings. Of course, lots of very rich people don't like that Powell has a heart. They hate inflation, especially wage inflation. So they want to rip his heart out, like the great scene in Indiana Jones and the Temple of Doom. Bottom line, sorry, Powell's heart stays in his chest. And unlike his critics, he's got a brain too.
Don't miss a...
All right, guys. So this is the I got this message from Edicino. As you guys can see from the comment section, he said he received this email from this is from quotemedia.com. Okay, quotemedia.com. And as you guys can see, I'm going to make it bigger. Quotemedia.com is more or less into web content solution, data feeds, and investor relations solution. I believe this is for investors. Yeah, investor relations solution, and so on and so forth. So it's more or less a media company, media firm. So this email is from this Quote Media. This is the message right here, guys. This right here is the message. So it's more or less like from Bionano Genomics investor relations alert. Corporate event alert for Bionano Genomics Inc. Stock split of ratio declared X date. I mean, I hope this is complete rumor. I hope this is complete BS. Because if I mean, I don't see any reason why Bionano Genomics would make some kind of stock split. Why would they do any stock split? I believe they still have at the market offering going on right now. In the first quarter of 2021, they made about $40 million using the ATM at the market. Okay, so I don't see any reason why they would make any stock split. I mean, even Tesla, when Tesla made stock splits, Tesla right here, I'm going to make this one bigger. When Tesla was trading around, where is it? Dailies. Let's go to the weeklies. So this is Tesla. Tesla made stock split, I think around $2,500 around this level. When it was around this level, this is pre-split. Okay, I mean, so they made stock split around this level. This was, around 2,000 something US. That's when they make stock split, when the stock was trading at 2,000 something. So I don't see any reason why Bionano Genomics trading at below $8 would make a stock split. So there is a possibility that is complete BS. Okay, so Edicino, it's from Edicino, and I'm trying to look for because Bionano Genomics. Let's quickly take a look at the name of the company responsible for Bionano Genomics investor relation. Investors. Where is it? How do we even find it? There is resources. Just a second, guys. I'm going to dig it out. Company, investor, corporate, legal, How do you get to that page? I know there's a page on Bionano Genomics where you can, if you want to contact BNGO, for example, there is a contact of their investor relation, not direct to Bionano Genomics. I'm going to look for it. I will look for it and I will share it with you guys. I will take my time and look for it, because I still need to make a little bit confirmation if this email is real or fake, okay? Because it looks somehow real to me, and that is scary. That is scary.
Right, they are going to run this economy really hot. Yeah, commodities, you give the Fed a huge hug. Right, they are going to run this economy really hot. And I do think we're going to have an inflation overshoot. It's not going to be like the 70s. But our economy is not built for high inflation and for the possibility that the Fed has to slam on the brakes. So that's why I think that if you are looking at the global recovery, and if you look at the US recovery, you were always worried about coronaviruses, new variants being your number one risk. Well, that has been joined now by a Fed policy mistake. That is how worried I am about a Fed policy mistake.
The country, that's somebody's workplace. So I think understanding that we need to make sure that workers are safe, that they are protected, and that they're paid a decent wage. This is an important piece of the puzzle, as workers are going out there and saying, hey, what kind of industry do I want to be a part of? What kind of job do I want to strive for? I mean, people are seeing, the places where they're valued and the places where perhaps they need to be valued more.
Yeah, very interesting point. Heather, thanks. It's good to see you again. Thanks for spending some time with us this morning. Heather Boucher, member of the White House Council of Economic Advisors. We are going to take a quick break. When we come back, the future of the investment.
Justin, good morning. Good morning. Good morning, team. What's up? What's going on? How is it? Is a stock split bullish or bearish? I mean, the question is, why would they make a stock split? That is the first question. If they are trying to raise money, they already have at the market offering going on right now, ATM. And in the first quarter, they raised about 40 million US dollars, So what I was, thinking is, I believe Bionano Genomics is going to try to raise money using ATM in this second quarter. Of course, they have about 360 something million US dollars in cash right now. But the thing is, if they have opportunity to raise money, I mean, they have to, okay? I mean, that's what most companies right now are doing, stock split, stock offering, everywhere. So there is no reason for them to make a stock split. That is what the first thing I would say. I don't see any reason why they would make any stock split. Oh, AMD, guys, AMD. I need to check out AMD. Something is going on with AMD, guys. Guys, this is my second stock. I started a second channel, strictly about EVFM. And as you guys can see, yesterday it was around 1.10 US dollars, and right now it is up to 1.18 US dollars. I need to check few stocks. I want to share some things with you guys today. So first of all, I need to put AMD here. AMD. Something is going on with AMD. This is not correct. Oh, eToro is messing with me. AMD right now is trading at 82 point something US dollars. I don't know why eToro is showing this crappy, and I think that is a breakout. I think it's a breakout. Yeah, you guys can see it. It's a breakout. It's a breakout going on with AMD. AMD. It's a flag. This is a bullish flag. AMD just broke out, guys. I mean, I own a lot of shares of AMD as well, so yeah, EDCino, of course. I mean, we will see. There is a possibility that is a breaking news. I mean, of course, I trust you, brother. I know you're not gonna mess with me. Stock split. But the thing is, the information in the email is not completely clear. Okay, I mean, according to the email, they only said corporate event alert for Bionano Genomics, stock split of ratio declared X date. So I'm still digging. I'm trying to see some SEC file.
Laying out their longer-term thesis on the investment banks. Now, I guess you would find this as no surprise. JP Morgan Investment Bank itself is upbeat on the longer run outlook for the sector. 3 reasons why here. They see the unwinding of quantitative easing will be a good thing for the investment banking industry. I think we're seeing some of that today after the Fed meeting. They see market volatility picking back up. That should benefit a lot of the trading desks out there on the street. Number 2.
So I'm checking Bionano Genomics SEC page right now, and there seems to be nothing. I mean, there is no new filings, you know, Security and Exchange Commission filing. So we just have to wait and see. I mean, you are the first person talking about this. Maybe there are other guys. I mean, on Stock Tweet, I also cannot find anything on Stock Tweet right now. I can't find anything on Stock Tweet right now. So
Banks instead of retail banks, and here it is. Retail banking, in our view, faces a greater threat from fintech due to lower barriers of entry and late realization of the threat from fintech players who have continuously gained market share. So JP Morgan saying it's time to lock in on just the pure play investment banks as opposed to allocating cash or parts of the portfolio to some of those banks with more retail bank exposure. And of course, they came out with some top picks, and they're calling it their pecking order of best investment banks. Goldman Sachs tops on the list. Number 2 is Morgan Stanley. Number 3 is Barclays. I would say, perhaps unsurprisingly, last on this list as a best investment for the future investment banking is Credit Suisse. They've really had a tough 2021, a tough 2020, and probably a tough 5 years before all of those years as well. Now, why do they like Goldman Sachs ultimately? I boiled it down to 3 reasons. Again, this is a very long report. They see Goldman as far ahead of the competition in reshaping its business for the future of investment banking. Number 2, they have the most exposure among the big banks in investment banking. By 2022, JP Morgan sees Goldman is pulling in about 65% of its total business coming from the investment banking businesses that they run, and they're broadening their client base. That's the last reason why they like Goldman Sachs. And you're probably wondering, why isn't JP Morgan the top one here? Is, well, when you're writing and publishing reports from your own investment bank, you can't put yourself top of the list, but I'm sure they view themselves as number 1.
I mean, it's ironic, isn't it, that Goldman's the top pick. They don't like retail banks, but Goldman's expanding more into retail.
Yeah, you know, I think, right, and I do acknowledge that here, but for them, it boils down to Goldman, compared to other peers in the industry, generates the most revenue from their investment banking business. Again, about 65% next year, and in terms of profits, about 79% of their pre-tax profits next year might be tied or just come through their investment banking business. That's tops on the street.
Look, I didn't read the report. If indeed those 3 bullets that we had at the beginning are the main takeaways, maybe I'm too cynical here, but I see a faddish one-time event in the taper. I think we've all heard China opening its capital markets for a long time, so not that interesting. And ESG, some hot new wrapper to charge more on a vanilla investment product. But again, maybe I'm just a little brain broken here on what investment banks absolutely do. All right, coming up on the other side of this break, going to talk a lot more about yesterday's big announcement.
So I think there is a possibility you are very right, but if it's a stock split, that is the question. There seems to be a corporate event coming up, you know, corporate event alert, and I think it's going to be about the earnings, you know, the second quarter earnings of Bionano Genomics. I don't think it's going to be a stock split. I think it's about the second quarter earnings, because, you know, that is what I believe is, you know, reasonably, that is what I expect to happen next. So I just signed up quarterly earning and filing instead of end of dates and this and that. I just signed up for the all email alerts, news alerts, filings alerts, quarterly and annual filings insider transaction alert, order filings, end of day price, corporate event alert. I just signed up for everything, so we will see. I think it's about the earnings, so I don't think it's going to be a stock split. I think it's just the earnings reports and the earnings call. So I mean, there is no reason for Bionano Genomics to make a stock split right now, guys. Absolutely no reason. I don't even think they are going to make any stock offering at this price, okay? I mean, I have a price target that I believe they are going to make a new stock offering, but I don't think it's at $8. I think we are still far away from, further away from another stock offering. So Tesla, EVFM, NASDAQ is on fire. Bionano Genomics is on fire as well. I mean, we opened today around $7.58 and right now it's trading at $7.88. Hopefully the crazy day traders are not going to take profit and ruin everything for us again. So I just received a confirmation from Bionano Genomics. So you are right. I mean, the email is completely correct. Edie, you are absolutely right, brother. You are absolutely right. There is going to be an event, and I believe it's going to be, it's going to be the second quarter earnings report and call. So this is correct, guys. This is absolutely correct. Edie Sino, thanks, brother, for sharing this. Yeah. I just got an email from them, and you are absolutely right. I mean, there's going to be, but this stock split is something that I don't think is going to happen. But I believe this is a genuine email from Bionano Genomics about investor relations. Yeah, you're correct, brother. You are correct. I'm going to talk about it once I want to, during my normal video. This is just a live stream to show what I am doing, live trading and so on and so forth.
By Oak Tree Capital Management Chairman, Founder Howard Marks, to chat all things markets. We will also discuss Oak Tree's latest $90 million commitment to recruiting more diverse talent into the financial industry. Plus, we're going to talk about the gaudy numbers being put up by TikTok.
AMD is on fire. AMD.
But let's begin with yesterday's news out.
Time to make some money finally. AMD. Oh my God.
Of the dot plot, Mike Schumacher joins us now, senior macro strategist over at Wells Fargo. Mike, you have your note right at the top. 2 dots equals double trouble for the Fed. How did you kind of read that plot when it came out, and how did you guys think through the implications of, I think, a larger than expected change in that forecast from the
AMD?
Yeah, it was surprising, Miles. There's not much question about that. I think a lot of people in the markets thought either the Fed would stand pat or maybe tack on 1 rate hike, but 2, I think, caught most people off guard. And from our perspective, there were a number of interesting takeaways. I'd say first and foremost, the Fed revised up dramatically its inflation expectations for 2021. So that tells us the Fed is still guessing, like all of us, in terms of just how long the inflation surge is going to last. But the other thing that's interesting to us is that if you go to the out years, 2022 and also 23, there was very little change in the Fed's inflation projection. So it's pretty interesting to see the number of rate hikes go up from 0 to 2, while the inflation forecast basically is static. That's kind of a tough disconnect to get around. And the press conference, frankly, didn't learn a lot from that. I think Chairman Powell is trying to preserve maximum flexibility. A lot of speculation on when the taper talks actually accelerate, when tapering certainly begins. But for us, it really was the 2 rate hikes and also the inflation switch.
So, Mike, what explains the disconnect to you between the change to the rate expectations at the same time that the inflation projections are not changing? Is it sort of a nod to the market in a way? Is it a sort of tacit acknowledgement that maybe it's not transitory, or maybe it's going to be more persistent, or the transitoriness might last a little bit longer but still be transitory? What do you think?
Yeah, it's interesting, Julie. I suspect the biggest thing to focus on here with respect to why you've got this disconnect is it really is a committee. And when you consider the dots out in 2023, they're just all over the place. So it tells us there's a very wide range of views. And it also, I think, tells us the confidence level in inflation forecasting is pretty low. So it indicates perhaps a number of people in the FOMC are saying, well, look, inflation's up a lot more than we expected over the last few months. Maybe this continues longer than we expect. Therefore, it seems pretty sensible to say, why don't we put a rate hike or two in the picture out 18 or 24 months? So I really think it is this very diverse committee, lots of different views about the inflation picture that's showing up in the rate hikes.
Mike, what happens to the bond market moving forward after what we heard from the Fed yesterday?
Yeah, the bond market really got a pretty big wake-up call. And when you think about other central banks out there, there's been a fair amount of talk about maybe not tightening, but at least becoming less accommodative. But for the Fed to go down that path is challenging. And quite a few investors we talked to had been of the mind or of the view that rates would stay quite low for a long time. Maybe yields would go up over the next 6 months, but pretty gradually. So they were pretty comfortable implementing strategies to try and pick up a little more return, a little more yield, the so-called carry strategies. That becomes a lot less comfortable today after hearing the Fed.
And Mike, something else we talked about earlier on in the program was, what the conditions would be in 2023 that would justify the Fed raising rates. I'm curious, based on the economic projections that were offered, it seems like the Fed believes there's a scenario in which it's a 2015, right, where you've got an economy that's performing about as well as the Fed would like, and they want to normalize rates. But there might also be in play a scenario where it's inflation that is encouraging the Fed to raise interest rates. How do you come down on the question of what would actually trigger the Fed to do those 2 rate hikes, which now seem on the table in a couple of years?
Yeah, Miles, it's probably a balancing act. And as Chairman Powell keeps pointing out, yes, employment's half of our mandate, so we'll focus on that. We'll focus on inflation. It's really a function of how the Fed weighs those things out, call it 12 months. And at this point, the Fed is not telling us really how that scale works. So if unemployment continues to fall, and it's come down dramatically over the last...
Who is invested in Unity Software? Unity Software. With the ticker U. Guys, this is Head and Shoulder building up on Unity Software. Head and Shoulder on Unity Software, guys. If you guys are into Unity Software, more or less like this. Consolidation. I'm going to be watching out for $106. Unity Software.
Maybe you have some visibility in the next 12 months. But given, for example, what the jobs report has shown over the past couple of months, I would quibble with the fact that we even have visibility for the next 12 months. So, I don't know. I don't know what my question is linked to all of this. I guess I'll come back to you guys being bearish and why you're bearish and what kind of what do you know? What do you feel like you know with certainty right now?
I think a couple of things there, Julie. First of all, to your semi-question, the economic data have been super tough to forecast for everybody. And that tells me there's...
This is TMO, bad form. This is TMO.
I mean, look, we get a pandemic once a century, so no one's got that baked into some sort of econometric model. You just don't know. And it means we all need a dose of humility. So in terms of what we're pretty comfortable with,
RC, I don't think there is RCN on RCON. I don't think Hitoro has it. Okay, Hitoro doesn't have it. Let's take a look at it on Yahoo Finance. I'm going to check out Yahoo Finance.
That's having a huge impact and really trying to get this recovery going pretty quickly. So you're going to see growth numbers that are off the charts for a lot of countries. And that we think puts a lot of froth into markets, labor markets really in particular. So what we know down the road is that the central bankers get less comfortable with that sort of thing. Maybe they don't get back to anything like we saw in 2017 or 18, but it seems to us that tacking on a few rate hikes here and there, whether it's by the Fed or other central banks, is pretty prudent, and we think it's pretty likely. So looking forward 12, 18, 24 months, those forecasts get a lot more comfortable. Month to month, really no one knows. You can't tell what the next payrolls report's going to be, plus or minus a couple 100,000. or the next inflation print, plus or minus a few tenths.
Recon technology.
And Mike, quickly before we let you go, Jackson Hole tends to be big moment for Fed watchers. Feel to you like that is building to another event where we could get that signal on tapering, as was almost sort of suggested yesterday?
It's possible, Miles. It seems a little bit too soon to us. And the reason I say that is that there is still so much yet to be learned about the labor market. I just said it would strengthen. I'll stand by that. But I think we'll have a better picture in terms of how that works when all these supplemental unemployment benefits go away and also when kids go back to school. So figure that September timeframe so we get those data points in October. So Jackson Hole, maybe, yeah, big stage, a lot of attention, but it seems like it's probably a couple months early to us.
All right, Mike Schumacher, Senior Macro Strategist over at Wells Fargo. Mike, appreciate the time. I know we'll be in touch.
Interesting.
All right, coming up on the other side of this break, we're going to talk about some of those numbers coming out of TikTok's huge pandemic boost. Back with more on that right after this.
So, bad form. So, Recon, they made a stock offering. I believe that is why the stock went down heavily. Like for real, from 15 point, almost 17. Okay, $17.36 was the high. Then it drops to this $4 level after they made this stock offering. So, it drops to this level. I think if you are if you want to be long-term invested in this company, I think it's, not a bad deal, because the market cap right now is $84.3 million US. And let me see. This is the stock offering that they made, $55 million US registered direct offering. That's why I believe the stock, went down from $17 US to this $4 US level. So it may be a steal. If you have a leftover money, you could just put the money into it, and perhaps, for long-term investing, maybe you're going to make some kind of, under the times of security, the company has agreed to sell 8.8 million shares, Class A ordinary shares, or pre-funded warrants to in lieu, blah, 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 blah. So that's why the stock went down. And the ordinary share warrants will expire 5.5 years from the date of issuance. The purchase price for one ordinary share will be at $6.24 US. The gross proceeds to the company 55. So they raised $55 million US, by offering some shares. How many shares? Even 8.8 million shares, at $6.24 US. So I think anything below $6.24 US, and there is a clause in that sentence as well. This is 5 years. They are saying five. Where is it? It will expire 5.5 years from the date of issuance. So this is a tricky one, okay? 5.5 years. So, you have to be long-term invested in the company. You have to think about long-term, not short-term. So right now, I believe it is, according to what they just offered, because the offering is at 6-point-something US. So right now, the stock is at $4.34 US. So maybe there is some kind of, opportunity. I think, we still have about $2 US until we get to that 6-point-something US. So I haven't read enough about the company, but it seems the company is not, it's not bad, so far, from what I have seen so far. Yeah, that's that about that.
Let's talk about some other business headlines we are watching right now. The owner of TikTok saw revenue more than double last year to $34.3 billion. ByteDance, which is privately held, said in a memo to employees that gross profit rose 93% to $19 million. ByteDance also owns Douyin, the Chinese equivalent of TikTok, and some other apps as well. It had 1.9 billion monthly active users across all of its platforms as of last December. The least successful COVID-19 vaccine trial so far, Germany's CureVac, estimated its experimental mRNA vaccine had efficacy of only 47% in a study with 40,000 volunteers. The company plans to continue that trial and still file for approval, but experts say chances for success are low. The European Union had agreed to buy 405 million doses of the vaccine if the European Medicines Agency approved it. The Justice Department is suing to block the $35 billion acquisition of Willis Towers Watson by Aon.
Whoa.
It's the agency's first major action under the Biden administration. The DOJ said.
Whoa, guys, there is Look at that, CureVac. This is crazy. Look at that, guys. CureVac. This is the news we're just listening to right now from Yahoo Finance, down almost 50%. Look at that. CureVac stock plummets after COVID vaccine fails in interim analysis. 50%. Damn. Whoa. I think CureVac is the company that Tesla CEO Elon Musk he built something for CureVac for making vaccine. Elon Musk CureVac. I think some month ago, Elon Musk deleted tweets speculating on CureVac vaccine. So that was April 9th and November. Yeah. CureVac and Tesla, they were building something together. This is in German, March 2021. I believe Tesla was trying to build something for CureVac. Tesla by CureVac in Elon Musk was in Germany. He was in Germany and he went to CureVac. I think he was trying to build something for them. This crazy website is in German. So the stock of CureVac right now is down 50%, 50% because something failed. Whoa. What? Look at that. 50% from it's back where it was in 2020. This is crazy. $50 where it was in 2020. I believe this is when they started to, talk about making vaccine for coronavirus, blah, blah, blah. You guys can see the rally. And then it started to consolidate. Of course, whenever something is consolidating like this, you want to be super careful because it can break to any side. And right now, it breaks to the downside. So, I mean, this is bad for the investors of this company. Back in time to 2020, minus 48.15% right now. That is insane. That's crazy.
It's suggesting that Ford and GM are starting to get their acts together in electric cars. And perhaps finally, Tesla is going to have some real rivals it will have to deal with later this year and moving forward.
Yeah, and look, I mean, Tesla has its own cachet, and that stock has its own story, and there's a lot of success there for a lot of shareholders over a long time. But moving outside of Tesla, and I just think of it because we've got Nikola on that board, a real blow up for a company that doesn't really have any products getting compared to Ford, GM, and Tesla. But the speed with which automakers that had no real products and just concepts of products got billions of dollars assigned to their market value over the last few months. That energy has certainly come out of the market. And, as you note, Sazi, you can just go back and buy a good old fashioned company like a Ford or a GM, and you're looking at these year-to-date gains, in excess of 45% for each. Ford shares up 70% so far just this year. So in a cyclical upturn over the last year, like many stocks, these two have doubled. Since during a cyclical upturn, let's say, you can go back to old boring stuff and still get.
So today there was a breaking news today. I don't know if you guys are aware of it. I don't know if you guys are interested in the trade desk. If you are invested in on ticker TTD, there was a stock split today, and you guys can see the stock went. The trade desk stock split is imminent. Here is what investors need to know. So they made a stock split. I think it was trading around, climb up to roughly around $600 as of this writing. It was trading around $600. So they made a stock split, and now it is, trading at $62. The reason why they mostly do stock split is, so that investors or retail traders can afford to buy one share of the company. It's similar to what Tesla did back in time, and when they were trading at 2,000 something $, they made like 5-to-1 stock split or 1-to-5 stock split, and then Tesla came down to $400 level. So the Trade Desk Inc., they just did the same thing. So in case you guys are interested in this stock, it is a breaking news today. Okay, so right now, if you take a look at the charts, let's quickly take a look at the charts, and then we can continue. So you guys can see they used to trade at this level, $600 level, and then right now the stock is, look at that, oh my god, 62 US dollars. I think Yahoo Finance needs to adjust. They need to adjust their chart. So I mean, now you can see 61 US dollars. It was trading at almost 600 US dollars. So yeah. I am still waiting for Bionano Genomics to go to this resistance level. I'm still waiting. I think we should get there. This is the 1 hour candlestick, so it's still very early. The market just opened about 1 hour ago, not even up to 1 hour ago. So we still have enough time. Right now we have this resistance right here. This is the 50 moving average. So that's why I believe we are kind of consolidating a little bit around this level. But I believe the trend is still uptrend. So we will see. We just have to wait like few more, maybe two hours max, and then we have to wait till this candle closes. Then we will see if we can, finally, when we're going to finally touch this resistance. I believe we are going to touch this resistance today. We should touch it today. I mean, that's what I should say. We should touch it today. Maybe we are going to break it today. We will see. But my price target for today is, somewhere around $8 US. Hopefully nothing crazy is going to happen. Okay. That's my price target for today. $8 US. We'll see. And AMD, of course, is going crazy. I love it. It's the beginning of the breakout, guys. In case you are invested in AMD, this is just the beginning. I mean, I've been following this crazy stock for like weeks now. It has not been doing anything. You guys can see it has been on a downtrend. And right now, finally, I see some kind of, since May, it has been going down, and then, it starts to rise. I don't see any reason why AMD should be trading below 100 US dollars. I don't see. I mean, it makes no sense for AMD to be trading below 100 US dollars. So,
oh, it's pretty severe. I mean, it's a condition that we've been making some progress. We've been focusing on it, but we really want to amp up the rate of progress. And the events of 2020 focused the whole world on equality and opportunity, and I think that's timely.
John, talk to us about the mentored fellowship. So if someone receives these funds and they're able to get into this program, what will that fellowship look like?
Yeah. Thanks for having me. And I'll start by saying I think we're a racial equity nonprofit organization, and we focus on both the individual and institutional sides of advancing racial equity, and so we've got a unique lens on how on what is going to be most important to moving creating the progress that Howard mentioned. And what we're so excited about is that Oaktree, Ares, and Apollo have come together and taken a very innovative and comprehensive approach to move the needle on racial equity within the alternative investment sector. And I think that comprehensive approach starts with diagnosing sort of and having a clear sense of why we are where we are and what we need to do to move the needle. And when you do that analysis, then you conclude that it's not a pipeline problem. Actually, the talent is there, and what these organizations need to do is actually to cultivate and prepare and to expose that pipeline to the fantastic opportunities that are available in the alternative investment space. So there are four key elements that they put together within the context of this comprehensive approach and around this alt finance initiative. And the first one, is really partnering deeply with HBCUs. Four to start: Howard, Spelman, Morehouse, and Clark Atlanta, with more to come. But partnering deeply with HBCUs to actually expose more students and to help them develop the understanding and the excitement about the opportunity. And the second piece is really providing hundreds of students, with those who get most excited about the space with a comprehensive preparatory experience, and so that they can get placed in the investor track, internships and full-time roles, and then giving them the support and the coaching to be successful in navigating once they're there on the job. And then the third piece of this is partnering with the Wharton Business School to provide a best-in-class applied finance and investing skills curriculum that's really an overlay, that connects what students are learning in the classroom to what they are, to what investors do on the job. And then the final piece is that they've made a big commitment to scholarship dollars, not just for the alt finance fellows, but for a broader swath of students at HBCUs, so that they can focus the majority of their their energies on intellectual development and career preparation, and so that they're not distracted, continue to be distracted by staying personally financially viable once in school. So we're very excited about the comprehensive nature. It's a 10-year commitment that I think can be transformational, not just for these students, not just for the schools, not just for the industry that is financial services and alternative investments, but also for society.
Howard, John notes that the pipeline of talent is there. The pipeline of diverse talent is there for these jobs. Why do you think the industry continues to overlook this talent?
I think it's not just a matter of the industry overlooking the talent. I think that that there are a lot of clever people out there who could make their mark in our area, but they have to know about the area. They have to develop the skills that are necessary, and they have to find us, and we have to find them. So there's a lot involved in moving people from possibility to career.
And on that front, John, what do you think is the biggest tension point that still needs to be improved upon? I mean, this is something you work on every day, right? Is it the getting people to the correct match? Is it earlier on in the process? What still needs the most work?
Yeah, well, I think it actually, Howard starts to really capture it. And I look at it as what we've been doing in the past, is with respect to attracting a broader, more diverse talent pool into the sector. Is essentially, I'll use an analogy, the way we've been doing it in the past is essentially akin to, elite college admissions, when you don't yet have the brand awareness among, the diverse population. And moving, going from an approach that's akin to elite college admissions to one that this initiative really embodies, which is more akin to how oil companies, execute their business. So, if you're an elite college, you make great opportunities available. You do a little outreach to the few places where you have some relationships, and then you just expect folks to apply, and then when they don't knock at your door, then you're a little bit stuck. You're trying to figure out where that pipeline is. But the orientation that they're taking, a much more comprehensive approach, is more akin to how oil companies do their business, which is essentially hire smart people, scientists in their case, to find out where those deposits are, right? Invest over multiple years in the infrastructure, the drilling infrastructure, and the pipeline infrastructure. You go down and get that crude and bring and then transport it to your refineries, where you add that the secret sauce and turn it into finished product for sale. And that's really the mentality, the mindset that needs to happen to move the needle, and that's really the sort of the underpinning of the alt finance approach that Howard and his colleagues are rolling out today.
I like that analogy, John.
NASDAQ is going crazy, guys. NASDAQ is going crazy. Up 200 points already since the market opened.
You at Oaktree have been at this for
and
a few years now
EVFM,
in terms of your diversity
EVFM.
efforts before 2020. And you're a results-based guy. How have you done?
I think
so
everything
far?
looks
How
good today
in
so
terms of
far.
Staffing and such, and your diversity initiatives.
Yeah, well, I think we've always had good intentions and an open mind, and that, of course, is not enough.
Since everything is going on fine, let's check out this. This is what I'm watching, guys. I'm looking at the Justia patents. I believe this is the United States okay, this is not website from United States. These are the patents assigned to Bionano Genomics Inc. And you guys can see the nano nozzle is also somewhere there, which was on date of the patent June 9, 2020. And this one is from May 2021, methods and devices for single molecule whole genome analysis. Of course, we already spoke about that. And this is another one from 2020 November, reduction of bias in genomic coverage measurements. Then we have the nano nozzle device arrays, their preparation and use for the macromolecular analysis, characterization of molecules in nanofluidics. That's another patent. So there is nothing new so far from Bionano Genomics in terms of patents. I mean, it's just the nano nozzle and the method and devices for single molecule whole genome analysis. You know, where we were talking about Bionano Genomics becoming, you know, turning the Sapphire device into a sequencing device. That's what we were talking about when this patent was released, May 4th, 2021. So nothing so far from Bionano Genomics in terms of patents.
In finance.
John, for those watching, what type of skills would need to be developed in your program to join a firm like Howard's?
Well, I think that the approach that we're taking, you know, is one that cuts across a number of areas, right? And you know, colleges are doing a really good job of providing the kind of curriculum that is, you know, the sort of the academic side, the core skills that relate to finance, all right? But what really needs to be, you know, broadened, and you need to have an overlay, what we call sort of the applied finance, that's built, you know, that's built around what investors actually do, okay? And that's really where I think, you know, Oaktree, Apollo, and Ares, you know, this is their expertise. They're the best in the world at investing, all right? And our view is that if we can bring the applied orientation, okay, and provide an overlay to what students are getting in the class.
Hoping for a little more direct, but Madam Secretary, again, welcome.
Thank you.
Let me recognize the gentleman from California, Mr. Thompson, to inquire.
Thank you, Mr. Chairman. Thank you for holding today's hearing. And Madam, today. And thank you for your comments on the Green Book. I want to just note that it's the first Green Book in 4 years. Madam Secretary, when it comes to paying for infrastructure, one of the simplest and easiest and least controversial tools at our disposal is making sure that everyone pays the taxes that they already owe. We know from the work that the investigative press has done, and from your agency also, that this isn't the case. And just this past week, we saw a revealing article in the New York Times about not only people not paying their taxes, but the use of waivers in order to create this convoluted web of partnerships that allow people to avoid paying their taxes. We had a subcommittee hearing on this matter just recently, and I think everybody agrees that people need to pay their taxes. I'm pleased that the president has put forward in his budget an $80 billion increase for IRS enforcement over the next 10 years. And that's a lot of money, but the return on that money will benefit not only infrastructure, but our economy and taxpayers' knowledge that the system is in fact fair. So I would like to get your take on that and this use of fee waivers, which allows private firms to treat management fees as capital gains.
So first of all, the president's proposal with respect to the IRS, I think, is a very important way of addressing what is a huge tax gap, estimated at a loss of $7 trillion in revenue that should be collected under our existing tax laws over the course of the next decade. The beneficiaries of that tax gap are largely wealthy taxpayers and the corporations they own. And it results in an inequitable tax system where workers pay what they owe and others often do not. And what the budget is proposing is, as you mentioned, nearly $80 billion in additional resources. First, to make investments that have large fixed costs, like modernizing information technology, improving data analytic approaches, hiring and training qualified agents who can bring enforcement actions against high income and net worth individuals and complicated corporate structures. The second piece involves providing the IRS with information that will help them target audits. We've proposed to give the IRS some visibility into opaque income streams by adding two pieces of information to the existing interest reporting form that financial institutions file with the IRS. And this would include data on aggregate inflows and outflows from accounts over the course of a year. With respect to private equity and the abuses that we see there, an important aspect of the president's proposal is raising the rate on capital gains and dividends so that for wealthy individuals, high-income individuals, it's taxed at ordinary income rates, just like wage and salary income, which reduce the benefits of trying to turn what really should be wage and salary income into capital gains. In addition, the president has proposed to get rid of the carried interest provision.
Thank you. Thank the gentleman. Let me recognize the gentleman from California, Mr. Nunez, to inquire.
Thank you, Mr. Chairman, and thank you, Madam Secretary, for participating in today's hearing. As you're aware, the administration's budget projections on inflation, originally you projected it would be well below 2%, but we've passed that figure with still 7 months to go. And in fact, just recently CPI came out and had the rate pegged at 6.6% annual rate so far this year. So, Madam Secretary, what specifically did we get wrong here to be this far off on an inflation target and in just a matter of a few months? Why did it happen?
Well, let me first say that the administration's budget, which was produced in February.
All right, guys. So we just touched
Inflation.
we just got to my resistance line. As you guys can see, Bionano Genomics just hit about $8 where my resistance line is drawn. So let's see if we are going to break it. If we break this resistance, guys, I mean, we are mooning to the moon. We just have to break it. We need to break it and go higher to this level, $8.11. And let's see if we are going to break it or not. But everything looks good so far. Right now we have a live testimony or whatever it is. Treasury Secretary Janet Yellen testifies before Congress on budget. So that's the audio that you guys are listening to.
The fact of the matter is that prices for everything are well above where they were before the start of the pandemic. But let me turn to a different subject. We have 26 states that have either ended or in the process of ending the $300 a month federal unemployment benefits program. We have roughly 9 million jobs that are open. We have 9 million people looking for work. There's not one business in this country that is not short of employment. And I hope that the administration is aware of this when you get out to real America in every single state. So are you willing to stand here today and say that it's time to end for the other 24 states that are still using this $300 surplus addition to the weekly unemployment benefit, should this come to an end for the other 24 states that haven't ended it?
Well, it's coming to an end in September under the existing law, and states are in different situations. There are some states with extremely high unemployment that are likely to want to continue providing this aid to people who are out of work. So states should have the flexibility to do what's appropriate for their circumstances. But in any event, the supplement will end in September.
Thank you, Madam Secretary. Mr. Chairman, I yield back.
I thank the gentleman.
Good afternoon, Zach. Welcome on board. What's going on, brother?
Going with the hearing, and we will encourage members to vote and come right back. With that, let me recognize the gentleman from New Jersey.
Thank you, Mr. Chairman. Madam Secretary, you're here because Democrats and Republicans have respected your credibility on these matters, regardless of what position you are in. And I trust that your credibility will continue to be excellent among not only American people, but also those of us who were elected to office. Madam Secretary, the 2017 tax scam targeted my constituents by capping the state and local tax deduction at $10,000. It is the oldest deduction on the books. They knew what they were doing in the Civil War to help out the states. Now in South Jersey, there is not the standard of living that there is in North Jersey. It's not unlike many other states. And so when you buy a house in South Jersey, it's going to be for a different amount of money, much less than in the same house in North Jersey.
Whoa.
But for instance, in my district, the county of Bergen, the average house, you're paying property taxes at about $24,000. There are not a lot of billionaires in Bergen County.
Whoa.
So when this chant came out, not only Republicans, but Democrats participated. Oh, everybody's interested in the middle class. But the fact of the matter is, if the threshold is $10,000, you know better than I do, that's far from what we had when we had total deduction. We have the case for, and we made the case for a full repeal of this cap.
So Bionano Genomics is breaking out, guys. BNGO is breaking out. BNGO is breaking out. Can we break this 8.11 US dollars? BNGO is, I mean, almost all my stocks are breaking out today, guys. Almost all my stocks are breaking out. Look at that. BNGO, AMD broke out. EVFM is also, somehow breaking out from the 1 hour candlestick. You have to turn this over to, you need to use the 30-minute charts to see it clearly. This is also a kind of tiny breakout going on. Tesla is also doing good at the moment, 612 US dollars. So let's see how far Bionano Genomics can go. Let's see how far BNGO can go. There is a breaking news, but I have to make a video about it. I think I'm going to end this live stream around 5 p.m. so that I can make a video and share the breaking news with you guys, okay? There is a breaking news. I'm not going to share it on this live stream. I'll share it in the video. So Bionano Genomics is breaking out right now, guys. Breaking out. You guys remember, let me switch over to the dailies. You remember I made a video when the first breakout happened around here. I made a video telling you guys that it was the beginning of something big. This right here, 18th of May 2021, of course. This breakout right here, I told you guys that this may be the beginning of something huge. And I was completely right. Let me put it right there. You guys can see the breakout. So that was the first breakout, and when it happened, I made a video telling you guys to be prepared, to be ready. So we are still going higher. I mean, I am not in a hurry. I don't know about you guys. I'm not in a hurry. So we'll see how far that we can go. So Right now, we are back above $8. There is a strong resistance from the 100 moving average, 100 daily moving average. Now I can see it clearly from the daily candlestick. So it's somewhere around here, $8.19. We have to get out of this area. Okay, we need to get out of this area, and this moving average needs to turn bullish. It has to go up like this. Okay, so we still have enough time. There is absolutely no reason, no need to be in a hurry.
I'd like to get your comments on deficits and debt. Like I said, 8 trillion to almost 30 trillion, 20 trillion up in a matter of about 13, 14 years. Madam Secretary, what's your thoughts?
So deficits and debt do matter. We need to have a responsible and sustainable fiscal policy, and as Treasury
Let's go. What's up, Dapo?
It has to be top of mind for me, and it is. But there's some of the metrics that we've historically used to judge the magnitude of debt, what's safe and what's sustainable. Conditions in our economy have changed a lot, and we need to take that into account too in judging what a responsible fiscal policy is. Importantly, interest rates have been trending down for several decades. Not just because the economy is weak right now.
Madam Secretary, we only have 3 minutes, so let me jump into my second
Okay, so,
question or comment.
well, can I just say that the real interest burden on the debt is a very important measure of the cost to society of running deficits.
Yeah, let me,
and have
I reclaim my time.
And that's negative.
Yeah,
Sure.
let me just say, I don't buy a lot of that. I just see the reality, common sense. The other thing I wanted to mention, the president's proposal of looking, there's a lot of talk about corporations and capital gains, but I want to zero in on small business. As a guy that was chairman of Florida Chamber, I can tell you they're looking at, you can, if I'm wrong on this, let me know. On small business, the tax rate's going to go, most of them are pass-through entities, as you know, 39%, 39.6, plus ACA is another 3.8%, so 43. And many states have a 10 or 15 or 8% tax. It's going to be 50% or more on a lot of small businesses that are the job creators in the country. Is that your proposal? Is that the president's proposal, is to have tax rates, including the state's portion, over 50%?
Well, the president has proposed raising the top rate back to 39.6%. But the higher rates on capital gains and dividends, that would bring them up to levels you
But on
mentioned.
small business, it's going to be.
It only applies to individuals earning over $1 million a
No,
year.
there's a lot of companies that are, I'm telling you, a lot of businesses in every state, 39.6 plus 3.8 plus 7 or 8%, you're 50 and 50% and above in terms of impacting small business, which impacts jobs. Thank you. I yield back.
Thank the gentleman. Let me recognize the gentleman from Oregon, Mr. Blumenauer, to inquire.
Thank you, Mr. Chairman. Madam Secretary, thank you for being here. We deeply appreciate your efforts and your leadership, and you're concerned about how we deal with the overall economy. I would just make one footnote here. I am concerned about what we do with escalating healthcare costs for the federal government. I totally agree with extending access, but if we don't have some cost constraint at some point, we're going to have some serious problems. I would commend the experiment that was started in the Obama administration in Oregon with 1115 waivers that have helped us keep the cost of medical inflation down and hit our metrics, and work that's going on now in Maryland. I know it's not exactly in your wheelhouse, but it's something that I think the administration should look at. But let me focus on making the transformational investments in clean energy and combating climate change. I really appreciate your commitment to tax fairness, helping rich people understand that they have to report all their income, and some modest adjustments. I was pleased to see the Treasury Department's Green Book recognizes the importance of repealing tax preferences for fossil fuels and advocates for the reinstatement of the Superfund tax. Could you talk about the importance of these provisions, particularly when paired with long-term extensions of wind and solar tax credits and the direct pay option that was pioneered in the Obama administration with the Recovery Act?
Thank you for that question. We see no policy justification for subsidizing fossil fuels. And the American Jobs Plan proposes to end these fossil fuel subsidies. That will help reduce incentives for producing oil and gas and help position the United States as a global leader in clean energy. Clean energy is a really rapidly growing industry. There's large potential high-wage job creation there, and we are looking to address in a very meaningful way climate change. The American Jobs Plan includes subsidies for green energy production, and there'll be many multiples the size of the fossil fuel subsidies. On the Superfund tax, we have proposed that it be reinstated because there's a continuing need to fund to mitigation of damages that's been caused by the release of hazardous substances. So on balance, we think this set of proposals encourages the creation of high-wage jobs, and we're using tax policy to propose to do so to respond to the existential threat of climate change.
Thank you very much, Mr. Chairman. I appreciate the opportunity.
Let me recognize Mr. Smith to inquire.
Thank you, Mr. Chairman. Thank you, Madam Secretary, for your service and appearing here today. Obviously, my time's short, but I have many concerns with the President's tax proposals. Repealing the stepped-up basis and taxing capital gains at death will hurt Nebraska's farmers, ranchers, and small businesses hardest at the absolute worst possible time. Your recommended exemption won't help most working farms. Treasury liens would only stretch out the pain, and we've seen in the past that exemptions for ag land and small businesses simply are not workable. I'm concerned about the President's proposal to raise corporate rates. Alongside SHIELD and the G7 minimum tax agreements, which would undermine the success of the TCJA, more competitive for investment and job creation, ending inversions and making American companies return profits from abroad and pay a tax on them. Obviously, many concerns. Even President Obama understood the importance of international corporate tax reform like we included in the 2017 tax law. I'm concerned that your proposals to expand IRS enforcement through mandatory spending will harm the vast majority of Americans who are law-abiding taxpayers most, and that your projections for the revenue it would collect are overly optimistic, especially in light of much more pessimistic CBO projections. At least your testimony is straightforward about your goal for these changes, making the tax code supposedly more fair, but with no attempt to pretend these proposals are really about raising revenue or restoring economic growth to pre-COVID levels. Because we have already had hearings on many of these proposals in the Select Revenue Committee, I would like to ask you about something you said recently that concerns me greatly. I know it's a topic that a number of senators raised with you yesterday as well.
Bingo.
Concerns. On June 6th, Bloomberg reported that you had said the following in an article, quote, "We've been fighting inflation that's too low and interest rates that are too low now for a decade." You went on to say, and this is not out of context, quote, "That's not a bad thing. That's a good thing." I would like to ask unanimous consent to submit the Bloomberg article for the record.
So ordered.
Secretary Yellen, we know that inflation hits hardest those who can least afford it already. Lower income folks, retirees on fixed incomes, and so forth. Has Treasury done an analysis of what the impact of higher inflation would have on lower income Americans and retirees? And can you explain why higher inflation would actually be good for them?
I'd like to explain what I meant by those remarks. The Fed has established a goal of 2% inflation on average, and has done a great deal to justify why that's a sensible goal.
Is there an analysis of what the impact on lower income Americans and retirees of what inflation impact would be? Is there an analysis?
The Treasury has not done that analysis, but I believe I have a strong basis for what I said. For most of the last decade, inflation in the United States is run meaningfully under that 2% goal. And there are costs to inflation being too low as well as too high. And one of the costs is that interest rates have been at zero levels, and the Fed has been forced to rely on asset purchases and other unconventional policies. So very low inflation and low interest rates erode the ability to use monetary policy actively to support the economy. So what I'm supportive of is inflation in line with the Fed's targets and interest rates at slightly higher levels that would give the Fed the ability to use monetary policy to address weakness in the economy. And
I
that's
thank the gentleman.
Thank you.
Thank you. Let me recognize the gentleman from Connecticut, Mr. Larson, to inquire.
Thank you, Mr. Chairman, and it's an honor to have you and in front of the committee today as well. And I appreciated your opening comments, especially in having to deal with COVID. Again, thank the administration for focusing on science, both as it relates to COVID and this pandemic, and also as it relates to climate change. And a hearing yesterday that we had on Social Security, one of our erstwhile colleagues asked a question of one of the panelists that said, what would it be, what's better off, funding Social Security or climate change? And the gentleman responded, Mr. Blair from Maryland responded, what is that, a trick question? We need to do both. And I commend this administration for understanding the need for us to address these inequities. My first question, with regard to the 2017 tax cut, which I believe was around $2 trillion, was any of that paid for?
No, it was not paid for.
Oh, okay. So $2 trillion in tax cuts, and I believe statistics will bear out, and we'll go back and forth with this, with 83% of that tax cut going to the wealthiest 1% in this country. Clearly unfair, and as you said in your opening remarks, COVID had to be addressed, but it also underscored an existing problem that we have with regard to Social Security, and specifically with women who, as you acknowledge in your statement as well, who've been out there in the labor force and working hard, but over millions of them, and most of them being it's women, but predominantly women of color and Black males, who on Social Security checks get a below poverty level check. I'm glad the president has signaled that Social Security is a sacred trust between the people and its government, and has put proposals forward that I think can be embraced bipartisanly. What do you say to that inequity that exists, and is Social Security a way to address that?
The president has indicated a desire to see some of these inequities addressed, and as you said, Social Security is a critical system that supports workers in retirement and with disabilities.
Thank you. I yield back. Thank you.
Mr. Reed, are you on the call?
Thank you.
Oh,
I am on the call. Can you hear me?
Okay, you're recognized.
All right. Well, thank you, Mr. Chairman. Thank you, Madam Secretary, for being here. Madam Secretary, I think it's about time to be honest with the American people. And the concept of modern monetary policy, modern monetary theory has become, in my opinion, the de facto policy of America. And I am very troubled by that position we find ourselves in, with $30 trillion worth of essential debt. I see the president's budget spending $7.2 trillion and adding, they're worried about the tax cut bill adding $2 trillion to the deficit, but your own budget adds $14.5 trillion to the national debt. And so my question to you, and it follows up on the commentary you made to Bloomberg that was reported, that Yellen took issue with those promoting modern monetary theory who suggest you don't have to worry about interest rate payments because the central bank can buy the debt. She said at an Asian investors conference hosted by Credit Suisse in Hong Kong, that's a very wrong-minded theory because that's how you get hyperinflation. So my direct question to you is yes or no, do you oppose modern monetary theory?
I do not support modern monetary theory, and I would stick by what I said previously. On the other hand, it is the case that interest rates have been very low. That's not just a recent phenomenon, it's something that's occurred over decades. And that does matter to what is a sustainable level of debt and what is a responsible fiscal policy. And that's the point that I've tried to emphasize today.
And Madam Secretary, if I could, and I only have a minute left here. And now, because you share a concern on MMT like I do, and we're concerned about inflation as we see these numbers coming down, and you recognize that hyperinflation is the scenario upon which MMT can result in, are we not in a position as a country of facing hyperinflation as a risk to our stability and position as the world leader from an economic perspective? And what are we doing about inflation to make sure it doesn't become hyperinflation under MMT policies?
So I don't believe that we're at risk of hyperinflation. We've had several months of high inflation that most economists, including me, believe will be transitory as our economy gets back in full swing after the pandemic and prices recover from the very low levels.
So then, Madam Secretary, why do we have to add $14 trillion to the national debt under President Biden's own budget proposal?
We're proposing critical investments in our economy, in our people, in R&D, in education, in public infrastructure that will make our economy more productive and address long-term structural challenges, make us more resilient to climate change, and lead to higher labor force participation. These are long-run policies intended to improve the functioning of our economy and address inequities that have existed for too long.
Thank you, Madam. I don't mean to be short, but that time was short. Thank you for your service, ma'am.
Thank you.
Congressman Kind.
Thank you, Mr. Chairman. Madam Secretary, welcome and congratulations on making history, being the first female Treasury Secretary in our nation's history. But more importantly, you're the right person, right job, right skill set at the right time. And we look forward to working with you in the administration as we emerge from this global pandemic and make America even stronger. First, a couple comments and then a question for you on global minimum tax. But my first comment, earlier this year, I led a bipartisan letter with many members on this committee expressing concerns about final regs coming out of Treasury involving Section 199A, the so-called grain glitch. We hope to be able to follow up with you and your team to meet in the near future to see if we can make progress on that issue. Also, as one of the original sponsors of legislation that created the opportunity zones, I would hope that with your help and the administration will embrace it and make it work the way it was intended. And that's bringing some early stage capital in those areas of the country that have been bypassed from the 21st century economy. And there's a way of doing this and doing it well. So we'd like to follow up with you on the opportunity zones and how we can better shape that for the results intended. Also, you probably read earlier this week the op-ed that Senators Carper and Cornyn submitted to the Washington Post titled, "Don't Cede Leadership in the Asian Pacific." And their argument, which I concur, is we need to develop a plan or a strategy to get back into the TPP, which is now the Comprehensive and Progressive Trans-Pacific Partnership Trade Agreement. This is the fastest growing economic region in the globe, the Pacific Rim region. Makes no sense for us to be on the outside looking in. And the structural reforms that we're demanding China to make are actually contained in the TPP trade agreement. And at some point, everyone's suspecting that they're going to want to be a party of that as well. So we hope to be able to work with you in the administration to developing that path to rejoin the TPP where we belong. And I think it's doable. And finally, on global minimum tax, I congratulate you on the progress that you have made, the announcement that came out. Obviously, a lot more work needs to go into reaching consensus to avoid the forum shopping, the race to the bottom, certain multinationals trying to become stateless in the modern economy and avoiding their fair share of taxation. How confident are you that you're going to be able to develop that type of consensus to move forward on that basis?
So I'm very optimistic about it. We're not there, but we've taken an important first step. I'm really pleased to see unanimity in the G7 that we should establish a global minimum tax, that it should be at least 15%. I recently contributed an op-ed. It was in the Washington Post, and I was joined in writing that by the finance ministers of Germany, South Africa, Mexico, and Indonesia. And I think that can give you the sense that support for this approach is not confined to the G7, that there are countries around the world who think this would be an important step forward. We've been working in the OECD with more than 100 countries and see a great deal of support. There are countries that have concerns. We have to work to address those, but I'm hopeful and I'm optimistic that this is something we can get done.
Thank you, Madam Secretary, and I yield back.
Congressman Rice.
Thank you, Mr. Chairman, and thank you, Madam Secretary, for being here. It's an honor to be with you, and obviously to have you some of the policies that you propose. I very much appreciate your commentary at the beginning about the concern about the stagnation of middle class wages for 30 years and the resulting income disparities that created. So I believe in there, and I think it's there. That's the job that.
Congressman, I'm having a hard time hearing you.
Can you hear me better now?
That is better, thank you.
And I believe tax and jobs act made our tax codes competitive. The result of that, in the year before the COVID pandemic, for the first time in a long, long time, we had the same middle class wage growth of 3% plus. Which is
Congressman, speak louder.
What is the gap on income disparity?
So let's check out ADMP.
Adopted and proposed by the Biden administration are shockingly bad.
ADMP is one of the stocks that I watch every day. ADMP.
The American Rescue Plan with the bailout of blue states, bailout of union pension plans, the legislation requiring that they be reformed to avoid future underfunding and paying people not to work. It's been a big part of the economic slowing in the growth. There's certainly people staying in the workforce, holding our economy back. And it's created inflationary jump off point we see in May, which is at 6% annualized inflation, which hits the people who are the most vulnerable, people who are on fixed income, people who are on Social Security and seniors. The second is the federal tax increases. Doubling the capital gains rate and raising tax on dividends and interest. There's a reason that almost every single developed country in the world allows preferential rates for investment. And that's what they want to attract investment, because investment creates innovation, and that makes workers more productive, and that causes our economy to give workers more opportunities, and we want to do away with that. If we do away with that, watch our economy stagnate, and another million American jobs go overseas. And then this idea about any stepped-up basis and expanding the state tax loan we mentioned in $3.5 million will cripple small businesses and family farms. And finally, the administration's policy, which encourages illegal immigration and creates a humanitarian crisis at the border, and adds to this endless flow of workers coming to our country who are willing to work for nothing. And it's a big surprise, particularly hurt people on the lower end. But they go to people.
The gentleman's time has expired. Gentleman's time has expired.
No.
Ms. Plaskett?
Yes, good morning, and thank you so much, Madam Secretary, for being with us. Thank you to the chairman for the opportunity to inquire. First, Madam Secretary, I was really, the discussion that you had with my colleague, Mr. Kind, about opportunity zones. I'm really grateful that the Treasury is interested in supporting how to assist these opportunity zones to really get into those areas that need it most, that we are not using the investment in opportunity zones to really continue to build in areas that have already have the tax credits and the support through new market tax credits and others, but really to expand that to rural areas and even underserved urban communities. So I'm grateful for that and really commit myself and our team to work with you on that. Another area that I wanted to talk with you about is when we talk about areas with unique challenges. The Virgin Islands and the other insular areas face unique economic challenges as a result of their geographic distance, lack of natural resources, and their general small island limitations on scale. In the 2017 Tax Act, it created a new tax on U.S. investments in U.S. territories as a result of GILTI. The GILTI provision, because U.S. territory corporations are considered foreign corporations, we in fact had an unintended consequence of having those companies have a detriment to being in the Virgin Islands. Under the administration's recent proposal, the GILTI tax would increase to 21% and eliminate the existing exclusion for the first 10%. We're concerned that this will have an even greater impact on incentivizing companies to come into the Virgin Islands and Puerto Rico and the other territories because of this GILTI provision. And I'm asking if you will commit to working with the committee and my office to develop appropriate and effective resolutions to these issues, including that would affect to encourage investment in the territories, while at the same time making sure that those individuals who come to the territories are in fact good actors.
Yes, I get to working with you on this. This is a complex issue. I understand the concerns that you've expressed, and we'll work to see if we can find a constructive approach to address this concern.
Let me recognize the gentleman from Arizona, Mr. Swiker, to inquire.
Thank you, Mr. Chairman, and just quickly, because it's getting quite old, the 83% comment for the up 1%, as you know, that's been debunked so many times. I know it's part of urban folklore for the Democrats. I'd like to submit to the record the actual facts. Madam Secretary, we've been actually doing a project in our office of trying to go over, because I know you've made a commitment that the tax hikes will cover the spending proposals, the increase in spending proposals. We're actually noticing they don't line up. And now that we're actually seeing some outside groups, both moderate to liberal to conservative, score the actual receipts coming from the tax hikes, that, many of, at least our current math right now is the revenues would actually only cover about half the new spending proposals. But knowing your commitment that you intend to cover all the new spending with new revenues, new receipts, am I to expect, is the country to expect soon to be a value-added tax, a VAT tax proposal? How are you going to cover that differential? Should a VAT actually be something in your consideration, Madam Secretary?
We have not proposed a VAT tax. That is not part of our budget or the American Family Plan or Job Plan. And we do believe we can discuss the details about scoring. I know that the scoring that's been proposed for the compliance parts of our proposal, the IRS investment, is less than our scoring.
Madam
This is
Secretary.
a very large change, and it's very difficult for CBO or joint.
Well, Madam Secretary, and I'm sorry, it's the tyranny of a 3-minute clock. And look, we all have to live by joint taxes scores. That's how you will move towards reconciliation. But when we start to see, is it Penn Weber or some of the scores coming out, they actually only gave you almost 1/3 the revenue calculations on your capital gains tax, and without the changing of basis, it actually lost 33 billion. And if those actually flow into the joint tax, you are nowhere near covering this increase in spending with your tax hikes. And I know you and the president have made a commitment that you're covering the new spending with these tax hikes.
I'm sorry,
What other
but we-
revenues,
but
what
we-
other revenue sources will you be planning to pursue to cover that spending?
I'm sorry, what we said is that we had proposed a series of spending proposals and tax changes that we estimated would cover the cost over 15 years. We didn't set down a marker that it is
Madam
utterly
Secretary, I don't think that's
necessary.
what you said actually in your opening statement. So with that, Mr. Chairman, I yield back.
I thank the gentleman, and without objection, the gentleman's reference to an article will be included in the record. With that, let me recognize Mr. Doggett to inquire.
Come and join me, brother.
Thank you, Mr. Chairman, and thank you, Madam Secretary, for an extraordinary bit of world leadership in trying to stop the global race to the bottom on corporate taxation. Why is it important for our country to exert its leadership around the globe on this, rather than to just, as some of my colleagues have suggested, be a follower? Perhaps those who are indifferent to corporate tax avoidance. And how can we set our rate higher than the global minimum tax without putting American corporations at a competitive disadvantage?
Well, we see the G7 announcement as an historic commitment that in turn reflects our tax reform proposals here at home, raising the headline rate and moving guilty to a country-by-country system. With a global minimum tax of at least 15%, the gap between the US tax on foreign earnings and the tax that's imposed by other jurisdictions will actually be narrower. With a guilty of 21% than the gap is today, with a global minimum tax of 0. So these proposals would, with 15% abroad, 21% here, if that's how it goes, we would have a narrower gap than we have today. And I think it's clear from the experience of the last couple of years that even the larger gap created by the 2017 Act hasn't been a big impediment for US firms. So if we lead in moving toward a higher rate domestically, we will motivate and give ambition to other countries to move higher as well.
And overall, in your revenue proposals, isn't the objective not only to avoid accumulating more national debt with more revenue, but to achieve some equity in our tax system?
Yes, we want to achieve equity that's critically important with respect to compliance with the existing tax code. We think it's extremely unfair that hardworking wage and salary earners, they're largely, 98, 99% complying with paying the taxes that are due. But high-income individuals and corporations, their tax compliance, they have streams of revenue that are less well captured by the IRS, and compliance is far lower. And we really think it's critical to remedy that. In addition, taxing income from capital dividends and capital gains at lower rates than workers face on their wages also seems unfair. So President Biden has pledged not to raise taxes on anyone earning under $400,000, and he's been assiduous at making sure that the additional taxes do not come from that group.
I thank the gentleman. Let me recognize the gentleman from Pennsylvania, Mr. Kelly, to inquire.
Thank you, Mr. Chairman. Mr. Secretary, thank you for being here. One of the things I want to cover with you is the safety
Whoa.
of tax information. And I just think watching what's happened with in the latest couple of days with Republican and what they are putting out for people to see raises a tremendous question, I think, in the American people's minds. That what in the world is going on? We no longer have faith and trust and confidence in the system that we have. This is a voluntary tax system. And for the idea that this can be taking place right now, and Republicans said we've got 15 years and thousands of these things that we can reveal, I think there should be an absolute outrage throughout the entire country, and both parties need to be involved in this. So can you tell me on what specific basis any American can be confident that their private tax information is not going to be published from this leak, given that we don't even know yet how this happened? To me, it looks like it can only be one source, and that I would suggest is probably coming from the inside of the IRS. But your opinion on that, and are you going to call for that too?
Look, this is a very serious matter. We can't tolerate the disclosure of confidential personal data. I take this extremely seriously, the protection of government data. We've referred the matter to the Treasury Inspector General and to the Department of Justice. The IRS Commissioner is looking into this, as is the Treasury Inspector General for Tax Administration.
But just if I can just interrupt you, because we are on such a short schedule. So I've seen this happen before, and so have you. I have not seen any type of investigation that led to anybody being prosecuted for anything, whether you go back to Lois Lerner or you go to President Trump's taxes being exposed. So we're outraged by it. So the question is, so what are you going to do about it? And the answer is probably nothing. And I think that's where the American people sit back and say, if you tell me there's not a double standard, you're going to have to come up from a completely different angle, because this just doesn't fly. One other thing I just want to cover with you, and this is incredible. We have expanded our money supply by 180% since January of 2021. And now we're talking about trillions more in additional spending. I would think that if anybody were to look at our M1 or our money supply and would see how this has accelerated since January and today, they would swear that there's somebody out there counterfeiting 24 hours a day, 7 days a week, and filling our economy with money that's no longer worth anything. I would submit to you that inflation right now is being caused by the fact that what we are printing is no longer worth what the perception of it should be. And that is one heck of a thing to be facing, especially when we're the reserve currency of the world. We are putting ourselves in a very dangerous position of people saying, oh yeah, right, I have complete faith and trust in that system. So I would like it if somehow somebody, and Mr. Chairman, I would like to submit this piece from tradingeconomics.com showing the money supply, the M1 supply, and the incredible amount of new money that's entering our economy every single day. At some point, we got to sit back and look at that. I can't believe that the prices. I'm a car dealer. Nobody could tell me that, hey, you know what, Kelly, if you hold on to that used car long enough, it'll be worth more, not less. That just defies any type of economic basics that we have in the form of retailing business or just business in general. So, Mr. Secretary, I appreciate you being here today. Mr. Chairman, thank you so much. I hope we continue, and we should have a really deep investigation on what took place with revealing these tax returns. So I thank you, and I yield back.
Without objection, the gentleman's comments will be inserted into the record. With that, let me recognize the gentleman from Illinois, Mr. Davis, to inquire.
Thank you, Mr. Chairman, and thank you, Madam Secretary. Madam Secretary, I applaud President Biden for taking action to ensure that everyone has the ability to provide for and care for their families. Paid family medical leave, substantial child care assistance, and a permanent modernization of the child tax credit, child and dependent care tax credit, and the EITC. In addition, I raised the importance of 3 other refundable tax credits. One, a tax credit for renters who spend at least 30% of their gross income on rent and utilities. Direct grant assistance is essential, but only helps a limited number of families. An advanceable refundable renter's credit could help every eligible taxpayer afford housing. Making the adoption tax credit refundable would help thousands of children join permanent loving families. The ATC currently disadvantages low and middle income families, which is why the ATC was refundable during the Great Recession. Substantially expanding the American Opportunity Tax Credit would help millions of low and middle income families afford college. Also, I want to work with you to ensure that billionaires pay their fair share of taxes on the hundreds of millions of dollars that count the gains profits. So, Madam Secretary, could you speak about the administration's openness to enhancing other refundable tax credits to help struggling workers and families?
Sure. Let me just say on housing affordability, we absolutely recognize is a key challenge, and we've made proposals there to expand low-income housing tax credits. That helps address the supply side of the problem, but on the demand side, we certainly would be interested in working with you on the kind of proposal that you've made. And you mentioned ideas on the adoption tax credit, the American Opportunity Tax Credit. Those are also important areas that are high priority for us, and we would like to work with you on those as well. In terms of education support, if you look at the president's full set of proposals in the budget, there really is a lot there to support education. He makes 2 years of community college free, and there's a major increase in Pell Grants. So the policies he's proposed will drastically reduce the cost of an education beyond high school, but we look forward to working with you on these matters.
Thank you, Madam Secretary. Thank you, Mr. Chairman.
Thanks.
And I yield back.
I thank the gentleman. Let me recognize the gentleman from Missouri, Mr. Smith, to inquire.
Thank you, Mr. Chairman, and Secretary Yellen, thank you for joining us virtually today. We've heard President Biden, Speaker Pelosi, and Washington Democrats repeat over and over that a budget is a statement of one's values. Reading through President Biden's budget, it's very clear that his administration values making Americans dependent on government and giving Washington greater command and control over our daily lives. The president's budget adds $17 trillion to our national debt, skyrocketing it to unsustainable levels. A sentiment you've shared as recently as February 2020, Secretary. It fails to support small businesses and promises to raise taxes on low-income, hard-working Americans. But the devil's in the details. Once we get past the astounding level of spending and taxes, we see that this budget weaponizes the IRS.
AMD to the moon.
The additional $80 billion in IRS funding will add 87,000 new IRS agents, more than doubling the size of the agency. I can't even imagine the egregious violations of Americans' privacy that will undoubtedly occur. I wouldn't be surprised if it is something similar to the appalling actions that took place at the IRS under President Obama. In case anyone has forgotten, during the Obama administration, Lois Lerner used her role as the director of the exempt organizations unit to target and discriminate against conservative groups based on inappropriate criteria, including their names and principles. When Congress started asking questions, she covered it up, destroying 422 backup tapes containing over 24,000 emails. Lerner faced zero repercussions and was rewarded with a generous government pension.
AMD is going to the moon, guys. AMD is going to the moon. So I'm going to put this right here. Let's see what's going on with the market. So Nasdaq is going crazy. And of course, AMD is not alone. I believe Apple, Amazon, Facebook, I believe they are also going higher right now. So I think it's due to the live video that we are watching, which of course is from Yellen, the Treasury Secretary, Janet Yellen, testifying before Congress on budget. So I don't know why Nasdaq is responding positively to what is going on right now, but it seems everything is good. Like, I told you guys yesterday when we had the decision, the interest rate decision from the Fed yesterday during the live stream, I told you guys that I believe everything should be normal. I mean, in terms of the stock market till September, because what that man was saying yesterday was, more or less, Jeremy was saying yesterday that he expects the lockdown to be easing. He expects, daycares to be opening so that, parents can get back to work. They can send their kids back to school. So yeah, AMD. I mean, I've been buying AMD dip since right here. I bought every dip of AMD around this level. So I have been waiting, for weeks now for AMD to break out. But so far this looks like just the beginning. I mean, I'm not going to celebrate right now. I need to see AMD get into this $90 level before I can at least celebrate. So this is just the beginning of the breakout. You guys can easily see the flag right here. So if we want to use technical analysis to predict where this breakout is heading towards, it's somewhere around here, around $92, somewhere around there, because you have to take the pole of the flag, and that's how you can see where it is heading towards, where it's headed to. So you just have to put it like this, just on top of the breakout level, then you come up with this. I'm going to put something around here. Let's see if we have some kind of resistance around this level, okay? Let's see if we have some kind of resistance. The only thing we have around here is, all this all-time high level. You guys can see some consolidation around this level. So let's see. I'm expecting AMD. First of all, we need to wait until it breaks this $85 level. Then, I mean, AMD have no business. There is no reason why AMD should be trading below $100 right now. And guys, gold is going crazy. Gold, I mean, since yesterday, immediately after the Fed decision yesterday not to do anything with the interest rate, gold has been going down heavily. Since yesterday, I'm not invested in gold. I would be shorting it right now, but I'm not, playing with gold right now because it is a very tricky one. I was expecting gold to move above $2,000, but so far it seems gold, is kind of, creating some kind of head and shoulder right there. I still believe at one point in time, gold should move above $2,000. So this may be a great opportunity to initiate a position in gold. Let me switch it over to the daily so that we can see what is going on. So this is what's going on, guys. You guys can easily see it looks more or less like some kind of head and shoulder going on, okay? But we have to wait for some kind of consolidation and a reversal signal before, I would say this is head and shoulder. But right now, I believe gold, I think I'm going to put a tiny bit money in gold at this level, 1,770. Let me put a tiny, but before I do that, I'm going to wait till this 1764. Let me see the 5-minute chart and see what's going on the 5 minutes. I think this is a good zone to put some money in gold. There is a chance. I'm going to do this, okay? I'm going to do this. I mean, gold is extremely down today. At least we should see some kind of reversal to maybe $1,790 before, even if the downtrend is going to continue. But this looks to me like a good look at Nasdaq, all-time high. Nasdaq is back all-time high, guys, all-time high. You can see Tesla is also responding positively on the 1-hour candlestick. Tesla is also, following Nasdaq. So there seems, because this live video that I was playing to you guys from Yellen, Treasury Secretary testifying, I think it's a positive thing. Okay, that's why I am playing it so that you guys can listen to what is going on. I think it's a positive message. Look at Tesla. Tesla has not even done anything. This more or less like, the bottom of Tesla so far. This 550 is the bottom, and you guys can see it's more or less at the top of the bottom. So Tesla has not even moved yet. We are still so far away from the all-time high that it was set around this $900. So right now it's trading at $617. So it's just the beginning, guys. I want to see if there's going to be a breakout from this right here. And Bionano Genomics, look at that. AMD is going crazy. AMD is going crazy, guys. I'm going to be watching gold. Nasdaq is already out of it. AMD is one thing that I am super watching right now. Bionano Genomics is more or less consolidating around this resistance level. So that is the situation of the market right now, guys. I mean, I need gold. Gold is the only thing that I see that I can day trade right now. So I think I'm going to free some fund and dump it in gold. More or less, the market seems to be, positive so far. NEO right now is trading at $47.5. What else? Nano Dimension is trading at $8, up 7% today. Nano Dimension, guys. Imagine there was no crypto, gold would be, yeah. If there was no cryptocurrency, gold will be trading right now at 3,000 something US level. That's, yeah, you are very correct. You are absolutely right, Zach. Without Bitcoin, without Ethereum, all these crazy cryptocurrencies, I believe gold will be trading higher right now because of all this. The value of dollar is more or less dying. Fed is pumping money. They are pumping money. They are printing money almost every day. They were printing money like crazy in the first quarter of this year, and last year they were printing money like crazy, trillions and trillions of US dollars. And right now, I believe they are proposing another trillions of US dollars. So, Virgin Galactic is not doing anything big. Which other stock is going crazy? I want to see if I can find some stock for you guys that is. So Shopify is absolutely going crazy as well. 5.6% today. Shopify. I'm trading oil right now. I'm shorting oil. So I need my oil to be open. Let me quickly show you guys Shopify. Shopify is also going crazy. 1,443. I don't know why eToro is showing me this crap. Shopify is going crazy. This is false. This is not correct. I think it's going to correct itself soon. This is where Shopify is trading right now. Shopify is trading right now around that level. Around this level. 1,000. Yeah, you guys can see it right now. 1,450 US dollars, almost back at all-time high. Shopify is a strong one. So AMD is right now at 84 US dollars. Tesla is going towards this 620 US dollars. I'm watching gold. I want to open a position in gold, but I'm still waiting a little bit. I don't think gold should go down any further. I mean, it has been going down since yesterday. Look at that chart. If you were shorting gold yesterday, since yesterday, you would make a killing. Look at that. Today, it opened at 1,810 US dollars. And right now, down about 40 points compared to where it opened last night. Look at that. Since yesterday, 1,860. 24 hours. Under 24 hours, gold has been selling off heavily. But I think there's a chance that it has found a short-term, mid-term bottom. So I'm still watching it. I'm watching it to see some kind of, if I can find some kind of bullish signal. I'm going to open a little position, maybe 200 US dollars or something, because I have some overnight fees that I need to pay eToro. So, yeah. Crazy.
Willing to support our proposals that are in the Affordable Housing Credit Improvement Act to achieve our mutual goal of creating more affordable housing. We have a tremendous opportunity to make real progress on this issue, and I hope that you will help us.
Well, first of all, let me thank you for your leadership in this area. It's very important. It's a key goal of the president to improve the affordability of housing, and he's proposed in the budget a significant increase in low-income housing tax credits You know, there's also a proposal that would result in the rehabbing of many housing units, but it's a very big problem, and we'd like to work with you on it.
Thank you. Again, we have strong bipartisan support, so I hope you'll work with us on our legislation, and I yield back.
I thank the gentlelady. Let me recognize the gentleman from Illinois, Mr. LaHood, to inquire.
Thank you, Mr. Chairman. Secretary Yellen, welcome. Secretary Yellen, I traveled across my district the last couple of weeks, and what I heard consistently from my small and medium and large businesses is the lack of workers. But let me just talk a little further about that. Napai Manufacturing, Quincy, Illinois, they could hire 50 new welders tomorrow. Dot Foods, Mount Sterling, Illinois, looking for truck drivers.
we
Monty's
have
Restaurant.
so we have a new tweet from from Bionano Genomics. We have a new tweet like 10 minutes ago. I think this is more or less, something from the past. I don't think it's something new. Yeah, okay, this is from June 15th. This is from June. Optical genome mapping unraveled structural variant detection for cancer research and precision medicine. Of course, it's from past. 2 days ago, it's also past. It's already history. So they made a tweet, the Bionano Genomics EACR21. I think this is European Union, something like that. Presentation is now available for on-demand viewing on our website and YouTube channel. Dr. Delpo presents examples of bionano structural variation detection for cancer and precision medicine using optical genome mapping. So, nothing big. It's more or less what Bionano Genomics, what they do. Comparison between optical genome mapping against the standard of care in 100 AML cases. So this more or less karyotyping, that's what Bionano. Let me just like it and retweet it, and yeah. So that is it.
A significant barrier for many families, and we're really only now getting up to vaccination rates that make many people have felt uncomfortable going back.
And I hate to interrupt, but I have limited time, Secretary. But let me just say this: I understand what you're saying on those items, but the unemployment insurance. So this is what they're telling me.
AMC is up 10% right now. I think the WSB for sure, they are going crazy right now. AMC is up about 10% right now, and this, now I hope in the position in AMC on Monday, okay. Because I believe what is going on is kind of unprecedented. In my opinion, Wall Street bets may drive the price of AMC, just like they have been saying. They may drive this price above $100. I hope in a small position just to follow, whatever is going on with the meme stock of the year, AMC. AMC is up about 10% right now. I think it's opened around 54, 53 point something US. That's where it opens. Right now, it's trading above $60 US. AMC. Meme stock is going crazy right now, guys. Going crazy. And AMD continues to go higher. I'm still waiting for Bionano Genomics. We touched a resistance up here, and I believe that's why the stock price is more or less consolidating right now. You guys can see my Bollingo band. This Bollingo band is a very strong one. You can see. First, we touched it on 14th of this month. Then we are touching it once again. So once we get out of this Bollingo band, just right here, just like here, we need to get out of it. When we get out of it, then if we see enough volume, I believe that is it. We are out of this $10 US level. So we just have to keep watching it. So Tesla is going higher. Oil needs to come down. I don't see any reason why oil should be trading above that level. Absolutely no reason.
Is not an option. And how does the budget request address the need to update the choices in such payment methods?
Well, the main goal of IRS and fiscal services is to try to pay people by direct deposit. And the vast majority of funds were distributed in that way that's really most efficient and safest. They're trying not to have to rely on debit cards and checks. In some cases, there are fees for checks and also for debit cards. But we have requested significant appropriations for IRS, and hopefully that will increase their capacity. There are limitations, as you mentioned, on the capacity to print checks, but we really would like to see more direct deposits.
Thank you for that. And as a member of the Small Business Committee, it was disheartening to see banks provide preferential access to their large, long-established clients for the initial rollout of the Paycheck Protection Program loans as Congress tried to keep small businesses afloat during the pandemic. However, including community development financial institutions, or CDFIs, in subsequent rounds was so critical to getting these loans to traditionally underserved businesses and communities. And we know that they were successful in doing so. So how does the budget request support CDFIs to help small businesses recover and grow, especially as we look to rebuild an equitable economy after the COVID-19 pandemic?
Well, the budget proposes additional funds for the CDFI fund so that it's in a better position to be able to support CDFIs in the important work that they do. But very importantly, in the act that was passed in December or January, there is a huge infusion of funds into CDFIs. Roughly $12 billion for direct support and grants to them, and very importantly for injections of equity capital that we're moving forward on at Treasury right now. This will vastly increase their capacity, and it's an important change.
I thank the gentlelady. We are now in the midst of a 2-to-1 ratio.
So let's take a look at what Mr.
So the Fed
Jimmy Chill
kind of surprised us. You, earlier this morning, just a few moments ago, said you think that Fed Chairman Jay Powell is great, that he did a great job.
Yeah.
You said you were on an island. You felt like you were on an island by yourself. Now, I can tell you were not. Because I
wasn't
spoke.
a single person who was joining me in the idea that Powell knows what he's doing.
Okay. I spoke with David Tepper.
Smart guy.
A few moments ago, right before we came on the air. He thinks the Fed did a good job yesterday. That's what he told me. He thinks he did a good job. That they show they're not asleep at the wheel. And by the way, he also said, I think this is a direct quote. I think the stock market is still fine for now.
Okay, can I just explain who Dave Tepper is? Dave Tepper, who taught me how to trade junk bonds. Dave Tepper is the only one of the people who comes on air actually running money, billions of dollars, and admits if he's wrong, but has been so far more right than wrong. He even predicted the pandemic down to the day. This guy is game. How'd you get that? That's fantastic.
He thinks what they did was smart. That it's still a highly accommodative Fed.
Then there you
right?
go.
We're talking
So he
2020.
likes the banks, then he give you, because he usually actually has ideas. Or the S&P.
We didn't go there.
Let's give him.
You want to talk S&P? I mean, he said, I think the stock market is still fine. I mean, that sort of tells you what he thinks about the S&P, I suppose. At least for the time being. 2023 is when they're going to hike rates, maybe twice. Okay, what year is it now? It's 2021, right?
Yeah.
All right, so 2023 still a ways off. It's still an accommodative, a very accommodative
Well, there
Fed.
it is. He's saying what people should be saying. Accommodative Fed. If things get really hot, we'll do something. Pragmatic guy. He's done a good job. One of the things that Dave Tepper has liked about the Fed chief is that he thinks he's smart and good and deserves the benefit of the doubt. And you know what? Tepper is no nonsense. He doesn't come on here with an ideological approach. He is not about preserving his wealth. He's about making money. And I like that. He is the most approachable billionaire in America today.
He didn't think that they were going to taper. They didn't. He thinks they probably will later in the year. And you know what? He also thinks if they do that it's good because it means the economy is in a really good spot, that they'd actually be able to do
Let's
that.
buy him. Let's buy him. We should be buying. That's what's going to happen. That's going to turn the futures around.
Well, you
said that I asked him a question once after he gave me the rap. I said, what do you think about playing Christian McCaffrey this weekend? He said, I don't even know what you're talking about. By the way, he owns the Panthers.
Right.
But when it comes to money, there is no better. When I was sick and I had the back problem, called me, what's going on? Holy cow. The guy was so game. He's like, how's your back? Let me tell you how I feel about the market. Like I wanted to kind of tell him. This guy is different from all the people who came on air in the last 24 hours who are talking about spots and dots, which is, of course, I aced at Harvard. He really, that's a art question.
I got you.
He really just basically said one thing. When he says these things, ignore everyone else because they're just speaking ideological and go with temper.
You said yesterday at the top of Mad Money, which I listened to, Powell was being prudent, was the word you used.
Yeah.
You said investors should, quote, stay the course.
Yes.
Buy stocks that would do well in a low rate environment.
Yes.
And the inflation hawks have no credibility.
That's exactly what
you
Temper's saying. How did you get temper? I tried to get temper.
It just worked out this time.
I had temper.
Sometimes you get it.
I think it's because of the
sometimes you
Sixers.
don't.
He knows I'm a loser. He's not going to call some guy as a loser. That is fantastic get. And what it does is it puts everybody else on notice that the guy who's a trigger puller, who has billions of dollars, who would be quick to say, Powell is really doing a bad job.
All right, beautiful people. Zach, Kamal, bad form, Edicino. I'm going offline. I need to record a video for you guys, okay? I'm going offline. I'm going to catch you guys in the next live stream, hopefully, maybe before the market closes. But I need to record a video right now, okay? So have a wonderful day, guys. See you in the next one. Thanks for checking in. Ciao, ciao.